So, yo, what is up for y'all watching this on the YouTube replay? Hope you're having a great day. There's not many stocks that are green today. We have Vita Coco, the coconut water stock I've kind of been pumping for a while. They're actually up to a new all-time high on news that the tariff import from coconut water in the US is going to go from 30% to 6%. So basically big tariff cuts on coconut water, and that's most of what they do. They just sell coconut water. But yeah, Google's also green. Berkshire Hathaway, which is Warren Buffett took a $5 billion stake into Google, sent the stock up a couple $100 billion in market cap. So I was a little bit surprised. I didn't think it would move the stock that much, but I'll take it. Let's go as a Google shareholder. But yeah, look at our Webull account today. Let me give you a quick portfolio update. We are down 1.6% on the day. We don't have much that's green. I guess our defensive Pfizer, we actually just bought Pfizer on Friday for the first time ever. So yeah, there's my little buy order. This is a pure dividend play. This has been one of the worst performance stocks. Pfizer's the same price as they were back in 1997, but pure dividend play. And they just acquired Metsera, which is a weight loss prescription company. So that would be interesting. But yeah, it looks like Futu's green on the day. But yeah, look at these red positions. AMD, Path, Robinhood. Actually, Dave was at one point down 10% today. Now they're only down 3%. Or yeah, they were down to 184. Now they're back to $200, but yeah, Robinhood's down 5.4, and Robinhood being down 5.4 is actually sending down Webull stock. Yo, what up, iAir? Yes, sir, I actually bought, I think I nearly doubled my position in Webull today. Check this out. If we head over, I'll go to share with you my main account in a second here, but if we go to our Roth IRA, yikes, we're down 1.78% of the day, but I made some changes in here. I now own 40 shares of Webull. Again, not a crazy big size position, but I think the risk to reward is starting to look pretty decent. I'm down 11% on my position. They're like, what are they worth now? Like 4 billion or 3.77 billion? They're legit like a tenth that makes me happy. The risk to reward's looking pretty decent on them. But yeah, I also increased my stake in CorMedix today. I bought a boatload of shares today. Well, not much, but I bought 29 shares. Yeah, all today, or 15 shares and then 9 shares both today. So yeah, I increased my position at CorMedix. So yeah, that's our updates on the Roth IRA. Oh, and I bought one more share of Iron Mountain stock. So this is another great dividend play that I love. I bought another share at $90.80. Bought one at $90.78. And then I was buying some at $103.96. So I love that we're lowering our cost basis on Iron Mountain. This is a real estate investment trust, a data center REIT. So yeah, I low-key want to buy Webull. You think I should buy 300 shares? Hey, I don't know, not personalized advice. I don't know but I would nibble on Webull, whatever, like a full-size position. Like I wouldn't have this as like 5% of your portfolio or more, unless it grew to that size. But for right now, I would nibble on the stock. It's definitely worth nibbling at this price. And I nibbled today. I bought another, 20 shares basically. So or a little more than that. So yeah. Honestly, Webull's looking pretty interesting. Here's my bull case for ticker symbol bull, and then I'll get back to the portfolio update. But here's the Webull brokerage right here. I've had the app had their brokerages for many, many years. For like 3 years, but we haven't done too good. We're only up 13% all time in here, so we've definitely underperformed. So don't listen to me. I'm not an expert. But what Webull just added specifically, which makes me really bullish, is if you look in the middle of my screen, there's this new prediction market stuff that they just added, and that's what's making Robinhood stock a lot of money. And if you look up here, it says on crypto, it says new as well, and they have the advisor thing. There's so much new stuff that they added where whenever whenever you go buy and sell a stock, they make like a penny or something. But whenever you go and do this prediction market stuff and the crypto stuff, buy and sell that's where they make a juice of a commission. And they just added this. I'm talking within the past 2-3 months. So that's what makes me so bullish. I'm more bullish than the analysts are. I'm also a shareholder of Robinhood. I regret every share I've ever sold of Robinhood. We only have 5 shares left. We used to have like 55 more. Like we sold 50 at $36. But one of the reasons, and I didn't expect this for Robinhood. I don't know. Or they have a crazy high PE, but they deserve it because no one expected this sort of growth on Robinhood. Legit, they doubled their revenue. Revenue's up 100%, after grew 36, after grew 52, but it's the bottom line growth specifically. They legit made 556 mil of net income, after paying 100 mil of taxes. So, or like 80 mil of taxes, but that's incredible. The net margin, they legit have a 44% net margin the most recent quarter. So Robinhood and Webull are two great stocks. And I own Futu. Fuck, you can't leave out Futu. Mentioning all the brokerages, they're another great one. So I own all three of them. I own Webull, Robinhood, and Futu, or Moomoo. All right, so let's see here. Sorry if I'm missing some stocks here. What up, Looney? Good to see y'all. Yeah, Google went crazy today. Yo, what up, JVM? Hi, Nathan. I plan to get bull too. I expect it to go lower. Yeah, that's what if this is the permanent bottom for Webull all time, that's amazing. But I wouldn't be shocked to maybe see it go a little bit more. That's why I'd recommend, not financial advice, but nibbling on the stock, not full size position it. Because for me, as much as I love it and I'm bullish on them, I only have $300 in the stock. And I might be more bullish than you on it. But hey, what up? What up, Connor? What up, Duolingo? Hey, remind me to get to Duolingo. I do want to get to that one. And then I've just finished my portfolio update. And hey, Zylan, dude, thanks for the gift there, Zylan. I appreciate that. But here's my Moomoo account. This is known in the top left. If you look, it's called our buy and never sell portfolio, because once I buy a stock in here, I try and never sell it. And these are all the stocks that I own in here. Comfort Systems, probably a lot of stocks you never heard of before, but like the Coca-Cola consolidated bottler for Coca-Cola, they actually are at an all-time high today, which is great. Defensive name. Powell Industries reports earnings, I think tomorrow, or when did they report that? The 18th? Yeah, and today's the 17th. So literally, wish me luck, and we're going to be streaming it. Powell Industries earnings tomorrow. That'll be an interesting one. I own Amphenol, Amazon, and then we're down on Ferrari and Murphy USA. So yeah, let's go look at some of y'all stocks here. Someone said, let's go ahead and look at Duolingo right here. And then we can pull up, what's that one? Oh yeah, CorMedix. I bought the dip on CorMedix today. I almost doubled my position on CorMedix. I bought shares under 10. It didn't go under 10 today, but CorMedix is kind of at where it was just a couple weeks ago. But here's Duolingo. It's a stock that's really getting hurt by the AI thesis. Now, I would nibble on this one here. I wouldn't have it as a major size position yet, kind of like Webull. But what's so cool about Duolingo is their financials, their numbers are so phenomenal. This is a subscription model company. It's a language learning app. And if you don't pay for their subscription, you see a bunch of ads on their app. But you pull up their subscription revenue right here. This growth rate's insane. It's up 45%, after grew 48, after grew 46, after grew 56. Like it literally just hits a new record every year, every quarter. And their advertising revenue is up 45% year over year, up 55, up 38. Like it's insane, the growth that's now happening. But one reason the stock is trending down despite good numbers is the AI thesis. Actually, OpenAI just came out with a language learning app that's free. You don't have to pay for any subscription. So the bear case is, they don't have, there's no IP or patent on like their app, but if you want to learn a language, maybe you could learn it for free elsewhere on OpenAI, and I think Google's making one, but that transition hasn't happened yet. Like their numbers are still phenomenal. We haven't seen a slowdown at all in their subscribers or their profits. Like the revenue's up 41, profits are up 159, the free cash flow's up 50. Like they're printing money. They just deleveraged their balance sheets. So actually, I do like Duolingo. I nibble on them here. Yeah, I like their numbers. Let's pull up Elf Beauty right here. They actually just acquired a company, which should be interesting. Any reason why SoFi's down? Hey, SoFi's just probably down because the whole market's like the fintechs are down. Dave is down a bunch. Robinhood, Webull, they're all down a bunch. Okay, here's Elf Beauty, makeup kind of company. The growth has been insane on this stock. Well, since like 2019. Check out the annual growth rate of their sales. And this is in fiscal year, but for the fiscal year 2025, we can just see how 2020 it was 280 million, 280 million for the full year. Now it's 1.3 billion. But one reason they have a high PE ratio. It says the PE is 52, but it's okay to have a high PE as long as you have high growth and you meet your growth expectations, but they missed on revenue this quarter, missed on EPS, and which was look at this. If we actually go down here, their balance sheet, you can see their assets went from 1.3 to 2.3. What just happened? Well, they actually just acquired a company for $600 million. So that's interesting. But despite buying them, the sales only grew 14%. So that did miss expectations. Like even with that acquisition, it was unfortunate to miss on revenue there. That might be why the stock's probably getting back to reality. So wait, what was that stock I wanted to pull up here? Actually, I just made a video about Lucid on my YouTube short and TikTok short. Yeah, wouldn't buy the dip on Lucid. They actually hit an all-time low today. I feel bad if you own this name right here. It makes sense. This is why I focus on numbers and financials so much, because it explains why Lucid's at all-time lows and why Palantir is near all-time highs. Check this out. If you look at Lucid, just think about this logically. You're buying the company at a $4.15 billion valuation. Like theoretically, you could buy the whole entire company for $4 billion. So let's say you paid that. You paid $4.2 billion to buy the whole company. Here's what you just bought. You're buying a company that just in the past 3 months lost $1 billion of net income. The quarter before, 500 mil, 400 mil, 400 mil, $1 billion, 600 mil. Just for all of eternity, they lose such an unsustainable amount of net income to the point where there's like real bankruptcy risk here. Sad part is they're also diluting you and issuing shares while the stock is at all-time lows. So just the fact that they burn that tremendous amount of net income, it explains why this stock's at all-time lows. Unfortunate. What's the difference between operating profit and net income? Well, operating profit doesn't include the taxes or the interest expenses in the one-time adjustment. So if we go to Duolingo, that's why I didn't show you Duolingo's EPS and net income, for example, because of the one-time tax adjustment. For example, if we go to the net income on Duolingo, it says they made $290 million of net income this quarter. It was actually a one-time tax adjustment that benefited them $100 million or like $150 million. But if we go to the operating profit, which doesn't include the one-time adjustment, we can see that the core business actually still grew 160% year over year. The profits did, so it was still a phenomenal quarter. Okay, and you know what? You got to watch. You always got to look at both metrics, because Tesla has done this all the time in history, where where there's literally quarters where they lost money. They lost money, but they have these one-time adjustments and like write-offs of like amortization. Anyway, at perfect times. And okay, let's see here. Do you do options? I actually don't do options, or I don't do options because I'm not very good at them. Hopefully, okay, good. I thought I disconnected my microphone. Okay, let's pull up this one right here. Let's do CorMedix right here. This is a stock I just bought a bunch of today. Let me give you a quick pitch for this stock. You know, not financial advice, but I nearly doubled my position in this stock today. They're down 11% on the day, and the shorts are just eating this company, but the risk reward looks so good. Yeah, I bought 15 shares and then 9 shares, both today. I don't know why I broke up the 2 orders, but yeah. But anyway, CorMedix right here, this is one of my favorite like small caps to buy. And again, if we look at the top right, the market cap, they're only worth $780 million. I normally don't like or love stocks that are worth such tiny amounts, only worth 700 million. But here's the thing. Oh, and here's the short interest. The shorts are eating them. If you look at the short interest, 22% or 21% of all the shares are being shorted. So there's some bear case here, but that doesn't scare me away. Their numbers are phenomenal. So the whole company, here's my favorite part. The company's worth $780 million. This company legit makes, if you go to net income, well, they actually just acquired a company this quarter, which was phenomenal, diversified them away. But this company makes, the whole company's worth 800 mil. They're making 20 to 50 million of net income a quarter. And we can see the EPS projections. The EPS, which is net income, is supposed to be, 80 cents, 72 cents. So it's at least going to be well over $2 a year. Well over $2 a year. And the stock is $9. So what that means is that the price to net income is literally 4.5. They're trading at 4.5 times net income. They're going to pay off all their debt within a year. They didn't have debt. The only reason they actually just issued debt for the first time because they bought a company. They only sell one product right now, Deaf and Cath. But with that new acquisition, that releases them 7 new products. So just the fact that they print net income, just big margin of safety. And that's why, again, as much as I love that name, I don't own like a crazy amount, like 75 shares or $750, but there's the risk reward starting to look phenomenal on them. But yeah, I do own some stocks that have a high short, like Powell Industries, for example. What's the short interest? Oh, no way. I forgot. Look, so the short interest before, it's like 16%. Just fell to, still high, about 11.7%. Yeah, they report earnings tomorrow. Wish me luck on them. I guess we'll see what happens. Yeah, Jim said, I think the market is waiting for NVIDIA to report. Yeah, that's right. That's going to be the big market mover. Here's my prediction. If I just had to give a prediction, I think NVIDIA is going to do great and hit a new, probably all-time high, probably go up to around 210 or 220 even. That's just my random guess. But thoughts on ExxonMobil buying this stock? So yeah, ExxonMobil, this is a great oil and gas stock. You're buying the stock to get exposure to oil, which if you buy this stock, you do not expect to outperform the tech-heavy S&P 500, and this hasn't even come close to outperforming the S&P 500 on any time frame. But what's great about oil and like Chevron, it's not just Exxon. It's every single oil stock that exists. Chevron, Exxon, EOG, whatever. But you buy them for the defense and the high yield. So first off, you get a 3.4% dividend yield. Chevron has an even higher one, like 4.5. But you get the high yield and you get the defense of oil. Oil usually does good in recessionary times, inflation, war fears, whatever. There's always some sort of catalyst. Whenever tech's going down, usually oil does good. So it's a nice thing to have diversify away if you're tech heavy and add a little defense. Would not have that as a major size position, but definitely would. I own MUSA, Murphy USA. Just bought the dip on this one. Okay. Hey, what up, Celery? Good to see you, homie. And okay, you actually the whole Nvidia. Let's do Nvidia real quick because they do report earnings this week. So why not go ahead and part of my ignorance, but how do I buy stocks? Yeah, hey, no, that's a very fair question. Hey, yeah, to buy stocks, you need a brokerage, and you can just buy stocks on a brokerage. And I'm on a brokerage right now. This one I'm using is my favorite one. It's completely free, costs nothing, no commissions, no fees, nothing at all. Actually, well, all these brokerages are all like that. All these brokerages are all in the link tree in my bio. This one's my favorite one though, for all the useful analysis. Like you can buy stocks on any platform, but this one's my favorite one, most useful. Link tree in my bio, very first link there. All the links are. But anyway, here's Nvidia right here. They have a crazy GPU market share. Obviously, 24%. GPU market share. Chips have just been in such demand from AI and also Bitcoin mining, but they also have this automotive software that Lucid uses, I think Uber uses, and mainly a data center play. Here's the thing about Nvidia, if another company can pull this off, they also deserve to be worth $5 trillion. Like, look at the growth rates in the middle here. Like triple digit just hits a new record every year, every quarter, and that's their top line. But look at the bottom line. They legit made $26 billion of after-tax net income. That's after the $2.5 billion of taxes they paid. But look, it's $26 billion up 60%. After grew 168. After grew 1,000%. So they're just on an insane streak of growth. Like the revenue was $46 billion. Out of that $46 billion, $26 billion was net income. So insane net margins, 56% net margins. The only thing is the law of large numbers is like if we look at the market cap on Nvidia, the whole company is worth $4.5 trillion. If you buy a share right now, for you to double your money, they have to be worth basically $9 trillion. So it's just a tough double I would rather buy some of the AI or like Nvidia beneficiaries like a Comfort Systems, Powell Industries, Amphenol, CEG. I wouldn't buy Supermicro here yet, but yeah, dang, our portfolio's tanking. We're now red on the day, down 0.27. Only thing holding us up is Google. Love them. Berkshire Hathaway or Warren Buffett just took a stake in them, $5 billion stake, our Roth IRA. What's the whole Q's doing right now? QQQ's down 0.8, SPY's down 0.8 as well. So actually, we're not doing too shabby. We're only down, well, if you include our other portfolios like this one, we're down 1.9% of the day. Oh, and speaking of NVIDIA, I actually chose to buy AMD for the law of large numbers reason. That's why I actually chose to buy AMD over NVIDIA. And they've done just as good. Well, not just as good, but I'm happy as a shareholder. We didn't even buy the dip on them too much, but yeah, we were close to a double on AMD. Okay, let's see here. Hey, what up, Luffy? He says Netflix. Let's do it. So NFLX. GRRR earnings tomorrow. Hey, GRR earnings are tomorrow and Powell Industries. Yo, we'll be streaming tomorrow if y'all want to hit by the way, we stream every single day if you want to hit the follow button. I literally sell nothing. I have no course book, Discord, WhatsApp, Telegram. I'll never ever follow you or DM you, nothing like that. But here's Netflix. So the 10-for-1 stock split just kicked in. Yeah, look at that. They're $110 a share. So again, it's just psychology. If you owned a share before today, you now have 10 shares. It doesn't change your ownership in the company. It's just chops the pizza up into more slices, but the size of the whole pizza is still the same. But check this out. I love Netflix. Oh, I would love to own Netflix if they didn't have such a high valuation. They trade at 45 times net income, but they have 300 million premium subscribers. They make $11.69 per user per month, which is pretty crazy. And if we go to their EPS, this was actually a one-time adjustment, a Brazil tax charge on their EPS. So the net income, even with the tax charge, still grew 7.7%, or actually, I don't know if that does include it, but yeah, let's actually pull up the earnings hub. They reported earnings not crazy long ago. Let's see what they have to say. So revenue growth of 17% led by APAC. Okay. Yeah, pricing of their ad tier adoption. Operating income increased 12%, but was affected by a $620 million Brazilian tax dispute. So basically, they've never paid taxes in Brazil ever, and they just had to backlog all the taxes to continue doing business in there. Let's see, advertising revenue doubled year to date. Really? So Netflix is a small advertising play because they have this ad tier subscription, and the best ad sales quarter. Wow, pretty cool. So anyway, let's go look at their net income right here. If we go to their net income, they just make $2.5 to $3 billion of net income, after tax net income, every single quarter. So I love Netflix. I just wish they did have such a high valuation. I'd love to own them too. I actually own Disney, which has not done well either. Well, we're 24% on them, but they just reported earnings, and look at this gap down we're about to see. Yeah, my Wi-Fi is just terrible, so I apologize. Please. Okay, I guess we won't look at the price of Disney then. Dang. All right. I think actually my Wi-Fi might be fine. I think it just might be Weeble. Yeah, that's why you got to get Moomoo right here. But yeah, Disney. Yeah, miss on their revenue, miss on their EPS, slight beat on EBITDA. Here's the thing, like the growth is gone on Disney really. Or like, look at this, the sales, the lifeblood of the company, the revenue is down 0.5% year over year. So revenue's down 0.5. They still made good net income, $2 billion in net income. Did they, good cash from operating activities, but did they invest? Yeah, so they're still investing a bunch in the future. High CapEx business with the theme parks. But anyway, this is not a company I expect to outperform the S&P 500, but I still own a bit. I just sold and rebought to lower my average. I'm long away. Hey, Amelia, or what stock were you talking about there? I love my Netflix subscription. Yeah. Okay, I'm getting crushed with Dell and APLD. Oh, yeah, I saw someone saying APLD earlier. Let's do APLD real quick. So that's actually in the NVIDIA portfolio. Yeah, speaking of NVIDIA earlier, NVIDIA is so big that they literally own some individual companies. Like CoreWeave is their largest holding, and their second largest holding is actually APLD. Mo said, talk about GameStop. Well, yeah, that's kind of, we'll maybe talk about them. Reacting right now, NVIDIA has to crush all their numbers. Yeah, Spotify stock, look at their net income growth. Yeah, Spotify is interesting. So here's APLD. They actually just got a big deal from Microsoft, I think. Or I don't know. It says CoreWeave's revenue forecast cut affects APLD. Okay. Well, here's the thing. They just reported earnings. They've since then, sold off massively. But on this day, they reported earnings. The actual earnings they reported on that day were really good. From what the analysts expected. Check this out. The orange line's what the analysts expected. They expected 45 mil. Well, they reported 64 mil. A big beat on revenue, and they lost less net income than expected. Analysts expected them to lose 13 cents. They only lost 7. So, oh, hey, watch out for that person in chat there. Yo, by the way, I sell nothing. I'll never follow you, DM you. I have no course, no book, nothing like that. All right, got that person banned. Okay. Yeah, also, someone said, did you DM me? That wasn't me that DM'd you. I'll never follow you. Or not in a mean way, but I'll never follow you, DM you, nothing like that. Especially trying to sell you anything. Okay, let's keep going here. GameStop, this is kind of like a cash play. You're kind of it's just mainly a meme stock. You're hoping Roaring Kitty tweets something. What's the short interest? 14% short interest. But yeah, here's the thing. You're not buying them for the core business. You're really buying them for the cash they have on hand. Like the sales haven't done too good, but their liabilities are going up, which is weird. That's really weird because that's what I used to like about this company. Look at their cash on hand. They have $8.7 billion of cash. $8.7 billion of cash on hand. But if we go to their Where's their total debt? Yeah, long-term debt right here. Look at this. This is what sucks. This is why I kind of like GameStop before today. But look at their long-term debt. A year ago, it was 12. It was zero. Basically, no debt. 12 million of debt. But now this company just issued a ton of debt. It went from 1.5 bill to $4 billion of debt. But they still have a net cash position of like 4 billion because look at that. Yeah, $8.69 billion of cash. But again, part of that cash bump was because they issued debt. So 8.7 bill of cash, 4.6, so 4 billion of net cash. And what's the market cap? 9.4 billion. So it's like 30% of the market cap is just cash, but I mean, it's like, And they earn a bunch of interest on their cash too. Okay. Hey, Nebius. Yeah. Oh, and Comcast. Yeah. Comcast. Remind me to get to them. I want to get to them after this. Here's another stock that kind of is like similar to Netflix, where it's a good company, but the valuation is just too high. Someone said specifically, look at the net income growth. So yeah, check this out right here. So they had a one-time adjustment last quarter. It says they lost 100 mil of net income. They didn't actually. And it says they made $1 billion of net income. Let's see if they actually did. So they actually didn't. They only made probably around 600 mil of net income, but it still grew. The profits grew 35%. In last quarter, it says they lost 100 mil in net income. They didn't actually. They made around 400 mil in net income. So that's good news. Let's go check out their, look at their premiums, monthly active users right here. They have 700 million monthly active users. 400 million of those are ad supported, but they have 281 million premium subscribers, which is not too shabby. Let's see. Monthly active users grew 11% year over year, fueled by emerging market expansion in upcoming Netflix video podcast partnership. Premium subscribers increased 12%. Supported by localized pricing and new features like lossless audio in over 50 markets. Premium rose. Ad-supported revenue declined 6% due to temporary softness in the advertising market. Oh, well, anyway, I love the net income they're making. Like, the business really is making, and it's growing too. They're really making like 500 mil a quarter. I mean, $2 billion, that's $2 billion a year. Yeah, 130 bill market cap. It's still, the forward PE is still pretty expensive, but they are good. Okay, let's look at Comcast right here. So CMCSA, unfortunately, their main business, their residential like connectivity cable business, is the reason why this stock is done so bad. It's the reason why the stock is the same price that it was in 2014. You know, it's the same for Disney. Disney is also the same price that it was in 2014. It's because of their residential connectivity business right here. It just declines every quarter, single digits. Like, the growth is kind of going away on Comcast, which is unfortunate. Like, this business just for forever is going to decline single digits, but that's why they need to invest a bunch. They own Universal Studios, like the theme park. They have like their movie business, like they own Despicable Me and all those movies and a bunch of other stuff. So anyway, they really need to invest in their other businesses. But if we go to their net income, right, yeah, sales. So again, the lifeblood of the company, the revenue fell 2.7% year over year. So the sales are negative. You know, add inflation to that, that's even worse. Revenue's down 2.7, and the profit, the net income was down by 5.5. So their margins fell slightly too, but they still make, you know, there was a one-time adjustment last quarter, but they still make around 3 to 4 billion in net income a quarter. And they have a safe dividend of basically 5% yield, 30% payout ratio. But I wanted to see them do some M&A. DTSS might actually be profitable next quarter. Let's check out Data C. Actually, we won't really cover this one. If you look in the top right, the market cap, they're only worth $10 million. You know, so whenever you lose $1 million, like they lost 1.78 million. At first glance, that's not that bad, only $1 million. But then you realize that's 17% of the entire company they lost in net income that quarter. And then 5 mil, 4 mil. So at least the good thing, they're narrowing their losses. Like they only lost 200K this quarter. And look at the revenue growth. That's really good. The revenue is now 19 million. There is no analyst expectation next quarter or analyst expectations at all. But be super careful with that name. Very small market cap. Oh, yeah, I wanted to get to SoFi. What's the name of the application that you're using? Yeah, hey, what up, Rakim? Yeah, hey, actually, this is a software brokerage right here where you buy stocks on. If you want to get it, it's actually in the link tree in my bio, the very first link there. It's a broker called Moomoo. It's my personal favorite one. Or I'm not sure all these brokerages. I'm not sure which one you're talking about. These are all brokerages. You know, they all ask for a bunch of information, send you a tax form. The very first link in the link tree in my bio. All of them are linked up there. This is my favorite one I'm on, called Moomoo free, literally cost nothing, free brokerage, no commissions. Okay, let's look at this next stock. SoFi. I do own SoFi. I actually own them in my Webull portfolio. I regret every share I've ever sold of them. We're up 354% on them. But yeah, the red momentum day of the market is sending them down. SoFi Technologies launches cryptocurrency trading as first U.S. chartered U.S. bank. So yeah, that's what's so cool about them. They actually have a banking charter, which is impossible, nightmare to get, but they actually got it through a loophole a long time ago through a loophole that's patched because of them, which is just nuts. So they got the valuable asset. But look at this. This is why SoFi deserves to be doing this well and deserves this momentum. If we go to their financial services revenue specifically, check out the growth. It's up 76 after it grew 101, after it grew 140, after it grew 280. Like the growth rate is so insane on the financial services over here. Same with their lending revenue, hit a new record this quarter, never been higher, up 25%, basically 500 mil of revenue. So that's why I think people are taking SoFi serious. They're beating on all analyst expectations. That's the orange line. They're beating on revenue every quarter. They're beating on EPS, which is net income, and on EBITDA. And if we go to their net income, 140 mil, they're making like 100 mil in net income a quarter. So SoFi is great. Probably wouldn't buy it. I wouldn't buy it meaningfully here yet. Again, they're trading at 73 times next year's net income. It's a tough valuation, but they definitely deserve to be doing this good. I'm not selling ever any more shares in them. And it sounds like they're launching some new crypto thing that'll make them probably a lot of revenue. What should I do to find the real net income without the one-time adjustment? Yeah, hey, JVM, you just compare the operating profit to the net income. I'll show you it's really quick. If we go to Duolingo right here and we go to net income, it says they made 290 mil in net income. Again, if we go to the operating profit, they only made 35 mil. That's because there was a one-time tax adjustment benefit for them. So yeah, you always just blend the operating profit with the net income. The operating profit doesn't include the taxes or interest expense. Or no, not that. Interest. Interest expense. Yeah, operating profit doesn't include interest expenses or the interest you make on your cash either. And that's why sometimes, like if you look at like GameStop or Duolingo, for example, they have so much net cash that it earns them more interest. That their net income is higher than the operating profit, even after paying taxes. Okay. Oh yeah, Nebius stock. Let's get to Nebius right here. They're actually owned by NVIDIA. They're like a smaller CoreWeave. If we go to the NVIDIA portfolio, NVIDIA owns CoreWeave. They own CoreWeave, APLD, and Nebius. All three of these stocks are nearly the same thing. They all do the exact same thing. They're just own a bunch of data centers with chips. But it's the partnerships, like Nebius specifically, I think they got a 15, you ready for this? A $15 billion deal with Microsoft. That's why they gapped up on this day when there was no earnings. It was the news of them partnering with that $15 billion deal with Microsoft. So some of them, Azure Cloud is going on their data centers. So because Microsoft doesn't want that liability on their balance sheet. But yeah, it says revenue growth was driven by AI infrastructure demand and a significant partnership with Meta. So pretty cool. Let's go. Even though NVIDIA owns this one, I wouldn't just buy a stock because NVIDIA owns it. You always want to go do your own research on it. But check out these, like the revenue went from 32 mil to 146 million year over year. Incredible increase, a 4x increase. And this was a record. It was 146 mil. That was a record. But check out what analysts are expecting in 2 quarters. They're expecting 471 million. If you annualize that, that's 2 billion of revenue a year. The EBITDA, they're losing 100 mil a quarter right now, but it's narrow those losses significantly in just 2 quarters with the growth of the sales. So they're interesting, but I don't know. I wouldn't have it as a major size position. Let's see here. Into it. Yeah, hey, we won't really cover them much. This is the, TurboTax people. They actually report earnings on the 20th. So in 3 days, they report earnings. I think the day after NVIDIA does, I'm pretty sure. But yeah, we can see their consumer revenue just hits a new record every year. But we can see it's always Q4 or Q3 of every year. Tax time is when they get all their TurboTax revenue. So tax season revenue. But even then, I love their net income numbers. Obviously Q3 is the best quarter. They made 2.8 billion of net income. When the same time last year, they did 2.4 billion. But look at the other quarters, it's starting to get better, 400 mil, 200 mil. So and you get a nice dividend. This is a perfect like dividend growth company. They raise their dividend every year faster than inflation. So, bro, I bought Pool because of Warren Buffett. Focus on the long term. Can we cover Warren Buffett portfolio? Hey, what up, Dynasty Control? Yeah, good to see you, homie. And what up, Best Self? Let's do it. Actually, Warren Buffett just bought a bunch of Google. We can see Warren Buffett's exact changes. We go to new right here. The only stock he bought in the most recent quarter, in terms of new position, was Google. That's why the stock is up today. He looks like he fully sold the DR Horton, but he increased his position, I guess, SiriusXM, Chubb, Domino's Pizza. But yeah, one of the stocks he owns and bought a bunch of is Pool. I wonder if we can find that on here. Yeah, Pool right here. It's 0.27% of his portfolio. Here's what's so cool about this one. It's an interest rate sensitive name. Number one pool part distributor in the US. So basically number one market share for like pool components. They're a $9 billion company. And we can see if we go to the right now revenue growth, it's slowed because of the high interest rate environment. If we zoom out, it's been negative for the past 2-3 years. It is somewhat getting positive now, plus 1.27% year over year, but that still doesn't beat inflation. But they make good net income still. Like they're making a kind of average out here, like close to 100 mil in net income every quarter. And when rates were way lower, it was way higher than that. Sometimes like they had that 300 mil quarter. But anyway, they also have a great dividend. Check this out, a 2% dividend. Let's go see how much the dividend costs. So they made 127 million of net income this quarter. Remember that. They made 127 million net income, and the dividend cost exactly every quarter 46 million. So as long as they're making over 46 million, which they are easily, they can pay the dividend. And also, since the dividend costs a little, they're actually doing a bunch of share buybacks. Check that out, like 40 to 100 mil of buybacks a quarter. So just looks like a shareholder-friendly company. I don't understand what's happening to Duolingo. Numbers are great. I agree, Millers. I agree. Jordy said what happens. Yeah, hey, again, if you want to get this broker, or this is a software where you buy stocks on, if you want to get it, it's in the link tree in my bio, that very first link there. It is an affiliate link too, full disclosure. Any good buying opportunities today? Yeah, actually, I bought some more. Here's my other brokerage. All these brokerages are on the link tree in my bio. But I bought a bunch of, well, not a bunch, but I bought, how many shares? 5. These are all today. So I bought about 15 shares of Webull. I also bought a bunch more Cormedics today. So that's really all I did. Just those two names. Oh, and one Iron Mountain. I bought another share of Iron Mountain. This is one of my favorite dividend, probably my favorite dividend stock for the yield, like my favorite 3.5% yielding stock. Your only stock green in here is Google, and that's because Buffett, I guess, bought the stock. But okay, when do you think market's going to recover? Well, let's wait till NVIDIA reports. Okay, PayPal, what up, Brandit? So PayPal, let's check them out. So, yeah, Duolingo is getting hurt by the AI thesis. Yeah, yo, what up, Omahari? How's it going? So here's PayPal stock. Unfortunately, this one hasn't done too well. PayPal's the same price that it was back in 2017. So they haven't done too well. But let's check out. And this is why, because the growth was slowing over here. It actually beat really good this quarter. But before today, like the sales growth was, mid to low single digits, 5, 1, 4, 5% growth. So yeah. But here's the best part. They make easily over $1 billion in net income a quarter. So what is PayPal doing with the $1 billion in net income a quarter? Well, since they don't pay a dividend, or actually they just started paying a dividend, but they do a bunch of buybacks. They spend $1.5 billion a quarter on share buybacks. And here's what it does for you. Here's what the share buybacks do. If you go to the net income's up by 24, but the EPS, which is net income per share, is up by 31 because the share part of the ratio went down. So it makes the EPS go higher, which makes the PE ratio go lower, gives you more ownership in the company, makes the dividend cost go down. So in short, buybacks just make the stock go up. What are all the apps using? Yeah, hey, all these are all brokerages. They're all in the link. They're all in the link tree in my bio. The one I'm on right now is the very first link there. Okay, Webull, check Webull, or here's my Webull portfolio. Yeah, hey, we're down 2.3% on the day in here. Yeah, we got Webull, Moomoo, Robinhood. We got all the brokerages here. So, yeah, out of all three of them, this one's my favorite. Very first link tree in my bio. They're all free. Okay, let's see. What made you buy Cormedics? Hey, I have a bunch of YouTube videos on that. They're good financials. It's strictly the financials of Cormedics made me buy them. So here's Qualcomm. This is almost like a royalty company. If you didn't know, check this out. I actually learned this Another cool feature about this brokerage right here, we can see the Morningstar research, and check this out. Look at here's what you can read, like what the bulls say and what did the bears say. But look in the very top one. Qualcomm collects royalty income on the majority of 5G and 4G handsets sold, as it holds many of the essential patents used in these networks. So that's pretty cool. They're collecting basically royalties. We can see their smartphone chip market share. It's 26%. It is down from 30%. So maybe that's why the stock has kind of been flat for a while. But this is one of my favorite dividend growth companies out there because it has a very safe high yield. Look at this. You get a 2% dividend yield. They raise the dividend every year faster than inflation. They actually, the net income, there was a one-time adjustment. It is the payout ratio and the PE are artificially high. As you know, the PE ratio is the price of net income. We can see it just spiked up a bunch right there. It didn't actually, they had a one-time adjustment. Since they lost $3 billion in net income, they actually made $3 billion, or probably $2.5 billion in net income. So that's the thing with Qualcomm. Did they like buy a company or something? No, I don't know. Oh, geez. Sorry. But yeah, Qualcomm's a cool company, I think. Can you show your whole portfolio? Yeah, that would take too long. Yo, if you go to the very beginning of the stream, and I do it at the very beginning and end of every stream, I do a whole entire stock portfolio update. But yeah, I also have a ton of YouTube videos where I do stock portfolios all the time. So yeah, if you're missing, or if you want to see my whole entire portfolio, check. But that's the best way to support me. Just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But you can just type into YouTube, Nathan Robert. Qualcomm, makes all the modems used in all communication devices, including laptops. Yeah, hey, that's pretty cool. So yeah, they collect those. They own the patents. Hey, what up, Brian? Good to see you, homie. We'll look at DEA. Can you check out Bull? Yeah, let's look at Bull real quick. This is a stock that I bought a lot of today. They're actually at an all-time low. I mean, they IPO'd this on April. But they are at a new all-time low today, and we are down 11% on our shares, and we actually bought the dip on them today. We bought roughly 15 shares of Webull today. If you're wondering, what is Bull? What is Webull? That's actually this brokerage right here, publicly traded. And here's my super quick bolt days. They actually just added this prediction market stuff into Webull, and they just added crypto into back to Webull. So, and they have this like advisory thing, which is pretty cool, where just like they basically copied Robinhood, but it's worked so well for Robinhood that they'd be stupid not to. So anyway, I just yeah, I forgot about that. Okay. Anyway, I really like Webull I like the numbers. I think the growth rate's going to be higher than expected, and they're going to make a lot of net income from that. So yeah, that's why I nibbled on that stock today. I bought a little more. Is Meta a buy? Absolutely not financial advice. Like right at $600, Meta is a great never sell company. Like if you have the intention to never sell Meta, it's worth buying right now, like for real right now. One thing that's spooking investors is how much they're spending on AI. But go to their cash from investing activities, you know, they're spending 20 to 25 billion a quarter solely buying and investing in AI, like buying chips, data centers, whatever, buying half a scale AI, like they're spending a lot of money. Like they did. I remember when they were spending a ton on the metaverse and stuff, but we want to see a real return on this, but I actually don't mind it. Like they can afford this, like roughly all their free cash flow just goes to that now. But they had a one-time tax adjustment this quarter. If we go to the net income, this was the main reason they fell. But again, one-time adjustment. It says the net income fell 82%. Which makes, of course, the EPS fall 82%. Well, there was actually a one-time tax adjustment from the big, beautiful bill, like a $15.9 billion charge. So if you go to their operating profit, which again doesn't include that one-time adjustment, this is why you always blend the two numbers together, we can see it was a record Q3 quarter for them. Basically $20 billion net income, first ever $50 billion revenue quarter. Free cash flow is $30 billion. So anyway, Meta is a great never sell stock, plus a 0.35% dividend. Yeah, I love all their assets too. You know, they own WhatsApp, Instagram. They just now introduced ads to WhatsApp. They own Threads, which now has the same amount of daily active users as X was. So, okay. You buy the dip on Coremetics? Absolutely. We did buy a bunch of Coremetics today. Almost doubled my position. I bought a little tech basket of 7 stocks today on an NVIDIA report play. Yeah, hey, if NVIDIA has some good earnings and they go up, that should just send up the whole AI ecosystem from like Comfort Systems to Supermicro to Amphenol, whatever. Can't wait. So let's check out DEA right here. This is this is a company where they're a real estate investment trust where they own a bunch of properties, and their customer is literally the U.S. government, and it's like I think it's an office. an office REIT, which isn't great or something. But yeah, the government is their main customer, and if with government cuts and stuff like that, um, I don't know. Let's look at their net. It's just the net income fell to 1 million, but you don't really look at net income. You really look at the cash from operations. Well, I don't know. I mean, it's not the end of the world here, but this is a dividend play. Yeah, wow. Look at the dividend. A 10.5% dividend. So you're basically buying this to maximize your dividend income because the stock has not done too well. It's pretty much at an all-time low. I'd have to do more research on this one. But certainly interesting for a dividend play. The dividend might be safe. I don't know. Most 10% dividend yielding stocks aren't safe, but if you're a REIT, it's different. James said KALV is the only stock doing well today in my portfolio. Yeah, the healthcare names are up. You know, Johnson & Johnson set an all-time high today. So it's a small one. This one's only worth $730 million. And the stock, hasn't done too well, actually. Lower than they were in 2015. You bought the stock in 2015, you're down on your position. But let's see, do they have sales? Revenue of 1 million. Last quarter was 13 million. But I guess this is what's interesting. The analyst expectations. Analysts are expecting the revenue to be 20 mil, then 28 million. And oh wow, but they lose a lot of money if that's real. No. So they're losing 40 to 50 million in net income a quarter, which is 200 million a year. Like they're literally losing 200 million a year, and the whole company is worth 735 mil. So now it kind of makes more sense why the stock is the same price that it was in 2015. There's kind of some real bankruptcy risk there. But they're finally having sales though, so it's kind of interesting. It's like a dilemma. Carnival Cruise Line, is it a good buying opportunity? Carnival Cruise Line is a stock you want to swing trade. I'm not a fan of buying and holding this one for the long run. It never has outperformed the S&P 500. I don't think it ever will. They're the same. Dang, Carnival Cruise Line is the same price that it was in 1997. Super cyclical, interest rate sensitive, and COVID wiped them out. Like they still haven't even recovered from the COVID price because during these quarters they lost like 1 to 2 billion of net income every quarter, and they still are. But Disney said that their demand for cruise lines have been like the best ever, and Royal Caribbean saying that too. And look at Carnival Cruise Line's net income; it's actually really good. It's really consistent now. That's really good. It was 1.85 billion this quarter. That's after they paid like 500 mil of taxes. So that was real. They made 600 mil. So the past year has been great for them. Let's see them continue this trend. Because if we zoom out, it used to be really bad. Like losing 2 bill, 3 bill a quarter. But things have finally rebounded on them. Okay. What stock did you buy about? Webull, ticker symbol Bull, and hey yo, shout out to the homie Maddie, our label brand on the YouTube stream with the 25 Ron super chat. Yo, thanks so much, homie. He said, can we look at ESEA? Let's do it, man. Thanks so much. And then we can pull up like Arista Networks and what up, Charlie? We'll look at CNXE, Professor Pumpkin. Good to see y'all. Okay, here's EuroCs. I actually have never heard of this stock before, but look at that stock price appreciation since 2019 or 2020. It was $3. Now it's $60. So that's phenomenal. Looks like they're about to report earnings. Now it's starting to make more sense. They've been beating on expectations like crazy every quarter. The orange line's what the analysts expect. They beat on revenue. They beat on EPS. Wow, $4 to $5 of EPS, and they beat significantly on EPS and EBITDA. So no wonder this stock is doing so good because they're beating like crazy on expectations. I'm going to guess this is an oil shipping company, let's see, engages of ocean-going transportation services. Yeah. So it's like a competitor to Zim. If you've heard of Zim before, ZIM. This one might be the better play. I don't know. Okay. Let's check out their dividend. So dividend is a 3%. So you get a 3% dividend. That's pretty good. It's more sustainable than like a Zim. Like look at this right here. They're making consistent net income, like 30 mil, 25 to 30 mil in net income a quarter. So remember that they're making around, we'll just call it 25 mil of net income a quarter. The dividend cost 4.5 million of net income every quarter. So there you go. They can easily afford the dividend. Okay, we're a little backed up here. Let's pull up Arista Networks here. Then we'll look up CNXC. And yo, Maddie, if you got another stock you want to look at, let me know there. Thanks again, Label. I appreciate that. So here's, I hope you're having a great Monday. So here's Arista Networks. I love this company's numbers. I'm talking phenomenal financials. Is there any weekly news? Microsoft opens Atlanta AI data center with Arista Networks infrastructure. Um, Arista Networks serves as key infrastructure provider with the facility, including. Okay, let's go see what they do again, or let's see what Morningstar has to say. Arista Networks has gained a top market share position in high-speed switching, resulting in our view from technology, holds best-in-class profit margins. Yeah, look at these net income numbers. You won't believe it. This is after they paid, over 100 mil of taxes. So they're making nearly $1 billion a quarter before taxes. But after taxes, they made 850 mil, 888 mil. And at this growth rate, what's it going to be the same time next year? So they're pretty much going to be making soon $1 billion of net income a quarter. Same with free cash flow. The free cash flow is easily over $1 billion a quarter. Near 40% net margins. Maybe the valuation's a bit high, like even after the dip. They're trading at 47 times PE, but this is the kind of stock that deserves a high PE because their numbers and their growth is so good. Margins are good. Yes, sales are up to a record on their product revenue. Same with their services revenue. That's up 38% to a new record, so that's great. US is 80% of the market. Yeah, I really like Arista Networks. I put them on the watch list. They're on my watch list. Hey, try not to spam there. Is that Blackstone? Maybe we'll get to that one in a minute here. Let's see. I'm backed up here on some stocks. CNXC. Then we can look up FMC. Someone said, can we please look at Netscope? Yeah, hey, if you got a stock you want to look at, give me the ticker symbol. I don't know if I'll be able to find that one. But here's Concentrix. They're a $2 billion company. And looks like they gapped up on this day, probably on some sort of FDA approval, and then have just been down ever since. So let's go see if we can figure out what happened here. Or I don't know, or I have no clue what this company does. Information technology, so no, it has nothing to do with biotech at all. So I'm just speculating. But let's see. The US is only 11% of the revenue, which is actually interesting. Philippines is 16%. Well, let's go check out their numbers. So every quarter they're beating on revenue. They beat on EPS this quarter, but a miss on EBITDA. So that means probably their gross margins are falling a bit. But if we go to their net income, yeah, they're making nearly 100 million of net income every single quarter. Sales growth is slowing though. Yeah, look at this. Sales are only up 4, 1.5, negative 1.2. Doesn't really beat inflation. But I don't know what they do. Concentrix.com. Maybe check out their website. Yeah, hey, no cookies. Oh my, you know what? We're not going to look at their website because they want my cookies. Okay, but anyway, it looks like they're a dividend play. What's the yield on this one? Oh, so a 4% dividend. Looks like the dividend kind of changes every year, or I don't know. Be careful with them. But it looks like the sales growth was slowing, but they're still making good net or decent net income. So FMC here, I think this is like some fertilizer company. I don't know. We need market to crash for the reset. Well, hey, I guess we're waiting for NVIDIA earnings. Yeah, yikes. Look at FMC stock. Pretty much an all-time low or something. That's sad. Yeah, they're only worth $1.5 billion now. Let's go look at their earnings report. I think this is some like fertilizer company. And sorry, my Wi-Fi is just not good today. Yeah, insecticides, fungicides, plant health, herbicides, commodities like this. Let's see if they plant crop health. Okay. Markets. Oh, so look at this. 25% of the revenue is Brazil, 23% US, Asia's 20, Europe is 20. Yeah, that's not good. The revenue to sales fell 49% year over year. It fell 49%, and yikes, I don't know what just happened. The business lost 100 mil of profits and lost 500 mil of net income. Something just happened here. That's not good. And even the cash from operations went negative. That's even worse. Yeah. Looks like a dividend trap. 17% dividend yield. As the stock price goes down, it makes the yield go up. And yeah, the net income's just, the sales growth was negative 50. And it's a tough one. I don't know if I'd buy the dip on them. Can you talk about Lucid? I'm down on them. Hey, we already looked at Lucid. Actually, I literally right before this live stream, I made a TikTok video about Lucid, and this is why I focus so much on financials right here, because Lucid's terrible numbers explain why the stock is at an all-time low. I feel bad if you own this one. Um, but here's kind of why the stock is at an all-time low. If we look at the market cap, the whole company is worth 4.1 billion. So whenever you buy a stock in the future, kind of think about it from this point of view now. You could you're buying it at a valuation of 4.1 billion. You could literally buy the whole company for 4.1 billion. So let's say you do it. Let's say you pay 4.1 billion to buy the company. You're buying a business that literally lost $1 billion of net income just in the past 3 months. And the quarter before that, 500 mil, and then 400 mil, 400 mil, $1 billion. So there's like high bankruptcy risk here. They burn just too much of an unsustainable amount of net income. I mean, that's the bad news about Lucid. They're leveraging up. They're diluting you while the stock's at all-time lows, and they can't do that anymore. It's just tough. Sadly, that's the kind of stock that's probably just going to continue to go lower and lower. And I've been burned on before. I've been burned on a lot of stocks like that. That's before I ever looked at like financials. Like I used to never look at numbers, but yeah, look at ChargePoint. ChargePoint's at an all-time low, just like Lucid. This was my EV bet. So look at this stock right here. This is my biggest loss. Here's where we sold our shares, and thank goodness I sold my shares. This is why sometimes it's good to take a loss on a stock. But we sold all our shares right on that candlestick, and check out where we bought it. Well, this you're just gonna look crazy. Look at this. There's all the buy orders. We were buying our shares way up here, and then we sold it all right on this candle. Thank goodness I sold it on this day, because since then the stock is down like another like 50%. And again, here's what explains the stock being at all-time lows. Again, the whole company, just think about this. The whole company is worth, the market cap is 187 million. So the whole company in the top right is only worth 187 million. They lose 50 to 60 million of net income a quarter, which is 200 million a year. They lose more than their whole entire market cap and net income a year. And on top of that, the growth is gone. Revenue's down 10 after it fell 27. So yeah, that stock, again, the numbers explain why stock is at all-time low, and it also explains why stock is at all-time high, like Google, Palantir. That's why on the stream we like focus so much on financials, because in the long run, that's what outshines. So sure, there's a short-term momentum around every stock, but hey, Isaiah, shout out to the homie Isaiah. Let's do it. He says, thoughts on BMY. Let's do it. Actually, Isaiah, I'm going to give you mod, homie. But let's see here. Wait, BMY, I think that's Bristol Myers Squibb. All right. So I think this is like a health insurance or some kind of life insurance company. I don't know, but unfortunately, the stock is actually the same price that it was in 1997. Like the stock is literally the same price that it was in 1997. But what's the dividend on this company? So you get a decent, 5.2% dividend. So you've gotten 5%, or well, actually less because they raised the dividend, but you've basically gotten 5% returns every year. It's definitely underperformed the market. Let's go see what they do again. So, or no, maybe they sell a bunch of different prescriptions. Check this out right here. Like Eliquis is their largest one. That grew 24% year over year. Not too shabby. They also own Opdivo. That grew 7%. I remember one of the reasons like they fell a bunch, or I don't know how long ago, like someone like passed away after taking one of their prescriptions or something like that. I don't remember. Let's go see what the earnings hub has to say. And then we'll go check out if the dividend's safe. Growth portfolio revenue increased 18%. Legacy portfolio revenue declined 12% due to generic competition impacting prescriptions like those two. So let's go look at their operating profit. This is what you really want to look at. So this doesn't include the taxes, so we'll subtract like 10, 20% off this, but they made, we'll call it 3.2 billion of net income this quarter. Let's go see how much the dividend costs. So, well, actually, they probably have a bit of debt. Yeah, so we'll just say they make 2.8 billion of net income a quarter, which is super generous. So we might even have to lower that. But basically what I'm trying to say is the dividend cost 1.26 billion in net income a quarter. So as long as they make over 1.26 billion in net income a quarter, the dividend is safe. But it says the dividend payout ratio is negative 54% because look at the past year. Because, there was a quarter where look at that. They lost 12 billion, but that was the one-time adjustment. But where the net income was only 76 mil, which didn't afford the dividend 1. So anyway, as long as they if every quarter is like this quarter, that was a good quarter. Okay, so Kala said MQG dot ASX. Oh, okay. We might not be able to view that one because they're an Australian company, and I just don't think we're able to view Australian stocks. My bad there. Yeah. Wait, MQG. Wait, MQG. Oh, here we go. Actually, we can view it. Check this out. Macquarie Group. Let me know if this is what you're talking about. Yeah, probably a $75 billion company. And they're Australian. And they got to be one of the top Australian companies then. Let's see what they do. So we'll convert the currency from Australian to USD. Let's see. Asset management. Oh, so they're an asset manager. Basically collect high margin asset management fees. Acquire whatever capital, banking as well. They're a bank and financial services company. So yeah, I bet you. Oh, well, actually, that's interesting. 32% of the revenue comes from the US. And then Australia and New Zealand are 32%. UK is 18. So they're all over. Let's go check out the growth though. The growth. So yes, they report in halves because they're Australian. So that's why it says 20 and in fiscal year. So to fiscal year 2026, 8 half one. The revenue was up 13% from the other half, but the net income did fall slightly. So yeah, their net margin fell by 12%. I don't know. Maybe that's why the stock fell. I have no clue. Wish I could give you more thoughts on them. Yeah, an Australian company. I don't know. They pay a dividend. Yeah, you get actually, I like how Moomoo does this. It includes it. So they take, since they're Australian listed, they take a withholding tax because if you're in the US, they just instantly subtract like I think 20% off the dividend. Anyway, let's go look at some more stocks here. Tommy said, last week I told you about this stock. WTO will rise more than 100%. Or what? Let's check this one out. U-Time. Oh, hey, yeah. We're not going to cover this stock. Yeah, if you look at the top right, the market cap, they're worth $5 million. They're a penny stock at all-time low. So, yeah. Congrats if you made money in that one, but I'd say that 99% have lost money in that one. I wouldn't really... yeah, no fundamentals there. Yeah, hey, they seem interesting. Yeah, no problem there. Hopefully that was helpful. I know it probably wasn't too helpful there. Agathis said, what's the difference between KO and COKE? So yeah, this is actually the Coca-Cola bottling company. They're actually at an all-time high today, which is pretty insane. But yeah, you can see where I was dollar cost averaging into this name. So very different from the main company. They actually bottle all the Coca-Cola beverages and then sell them to stores and stuff like that. So way lower dividend, a 0.6% dividend. Payout ratio is a single digits, which is great. They actually, here's the reason. If you're wondering why is this stock really momentuming up to an all-time high, I've never seen a company do this, but they just bought back 22% of all the shares that exist in just one day. I mean, it was pretty crazy. Oh, but yeah, the main Coca-Cola company, that's the, Warren, that's one of Buffett's best picks. If you go to the Warren Buffett portfolio right here, his fourth largest holding is Coca-Cola. It's 10% of his portfolio. This one also is a nice defensive name. It's pretty close to all-time highs too. But you're not going to outperform the tech-heavy S&P 500 with Coca-Cola stock, but you buy this as a nice defensive name that still does great. It's a nice addition to a portfolio. You get a nice dividend, basically 3% dividend or a 2.8% dividend that they raise the dividend every year. So you get you get 3% in dividends, then you get roughly 3 to 4% in stock price appreciation every year. So for a total return of 7%, again, doesn't outperform, but 7% a year is not too shabby. Certainly beats inflation. Rator, what up, dude? Wait, hey, Game Freak said, for beginners, focus on long-term. Hey, what up, Game Freak? Good to see you, homie. Someone said Luke said MTSFY. This, I've never heard of this one. Mitsui Fudozen, or is this Mitsubishi? Or I don't know. Or this is a Japanese company. They're Japanese listed and they're pretty much at an all-time high. So we'll convert the currency from Japanese yen to USD. Rental. I don't want to say that word or the first part of it. Wait, or management? Looks like that the annual growth hasn't done too well. Let me go check out their website really quickly. Leasing. They do leasing, property sales, management, and other. So it looks like they're like some asset manager, very diversified. Here's their website. Oh, don't know why Well, I clicked that because it's not in English. But anywho, let's go check out their numbers because that's what matters. If we go to their net income down here, wow, is that real? Yeah, the most recent quarter, they really made 864 million of net income. And you get a 1% dividend, safe payout ratio. But it seems that it might be a little cyclical just because of, I don't know if it's like a car rental or I don't know what it is exactly. But these numbers look good. 900 mil of real net income this quarter. So Pfizer stock. Let's check out this one. I actually just bought this stock. Again, this isn't normally the stock. I should not own this stock for my age. Hey, what up, Lulu? But look at this. If we look at Pfizer stock is literally the same price that it was back in 1997. So it's done terrible. But we actually just bought the stock for the first time ever. We're up 0.4%. Not pretty much nothing. But I bought this as a stock to maximize my dividend income. First and foremost, it's a way I'm buying this to maximize my dividend income. But secondly, my second main reason for buying this stock is actually their acquisition of Metsera. They just acquired, it used to be a stock, MTSA, but then they just acquired them for $10 billion. They're basically the only other competition for Ozempic and Zepbound. It's like the third main weight loss prescription, and they just acquired them for $10 billion. So that actually now makes Pfizer, puts them in the weight loss prescription market. So again, this is the main reason I'm buying them. If we go to the dividend, you get a 6.77% dividend. So basically you get 7% of your money back in a dividend every year. And then you're kind of praying for 1 or 2% in stock price appreciation in terms of the stock, but you mainly get it for the 7% dividend. And here's how we can tell that the dividend is safe. Well, here's the EBIT, which is earnings before interest taxes. But look at how the past 3 quarters, they've been beating a good chunk on EPS every quarter. If they keep up with these EPS beats, the dividend payout ratio is going great. Like, check this out. So this quarter, they made $3.55 billion in net income. Remember that number. They made $3.55 billion in net income this quarter. The dividend cost $2.44 billion every quarter. So as long as they're making $2.44 billion of net income plus every quarter, they can afford the dividend. And it's good to know that they're making well above that as well. Like in terms of operating profit, they should be making really over $3 billion of net income every single quarter, which leaves them around $500 million of extra net income every quarter to play with. So not a great stock, but hey, what up, Brian? Let's see here. Yeah, we already looked at Comcast. Comcast, not a great one. Because they're residential. We already looked at them actually like twice already. By the way, if you missed anything, I'm also streaming on YouTube. You can like rewind it. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, you can just type in YouTube Nathan Robert. But let's look at Celsius right here. Comcast is like a safe name, but it's like the growth is gone. Like the sales, the revenue is just expected to decline like single digits for the rest of time. So here's Celsius right here. This is a company with a lot of growth because of an acquisition. Actually, there was like a mixed bag quarter because overall it was a good quarter, and I'd actually look into buying the dip on this one. So Pepsi bought a stake, bought 7% of the company. They didn't pay all cash for it. They actually gave them the Rockstar energy drink brand, and also agreed to distribute and like manufacture all the drinks for them. And so they're actually bringing in, so there's so much to say here. Celsius acquired Alani and Rockstar Beverage, and they're terminating their old distributor and switching to PepsiCo. So they had a one-time adjustment of $250 million that impacted their net income. But here's the crazy part. If we exclude the acquisitions, the organic, just Celsius brand organically grew just itself 44%. And Alani grew 114%. Anyway, there was insane growth over here. If we go to the EPS, there was this one-time adjustment. If we go to the net income, since they lost 60 million net income, they actually made around 150 million of after-tax net income when you exclude that one-time adjustment. And the sales were up 172%. Again, Celsius organically grew. They acquired Alani last quarter, and they just got Rockstar Beverage this quarter. So pretty cool. I love their beverages too. I love Monster as well. MNST, Monster Beverage, such a great defensive name. All-time high. Look at that. All-time high on Monster Beverage today. Congrats if you own them. Chipotle stock. So Chipotle, yeah, they're finally at a reasonable valuation, and like they kind of deserve to be around this price right here. Like before earnings report, they were trading at like 35, 38 times PE, which was too high for how much they've been missing on growth. So the growth is disappointed. Like if you go to the analyst expectations, they've actually missed on revenue for every quarter for the past 3 quarters, which explains why every time they report earnings, they just gap down so aggressively. Because before today, if we look at the PE ratio, the PE, it's always been, 39, 40, but they're finally at a reasonable valuation of around 27. They're trading at 27 times net income. That's the good news. But look at the revenue. The revenue grew 7.5% year over year. So the sales grew 7.5, but the net income actually fell by 1.4. That's because their net margins are going down. Gross margins are down and net margins just because the input costs, they're not able to raise prices with the same rate that they're having the food input cost inflation and hiring workers. But out of all the food stocks that are on a dip, and there's a ton of them, I like Chipotle the most because they still print money. Look at this. They're making $300 to $400 million easily of net income every quarter. And again, Chipotle's doing bad. It's not just them. It's the whole industry. Like, look at Wendy's. Did you know Wendy's is literally the same price that it was in 2008? It's lower than it was in 1997. Like Wendy's is pretty much dead. Jack in the Box as well is another sad story. Pretty much all-time low on Jack in the Box. They're the same prices they were back in 1999. Donut, which is Krispy Kreme, I think they're at an all-time low. I mean, these food stocks are getting crushed. And if I was going to buy one on the dip, I'd look at a Chipotle, Yum Brands, or McDonald's. Those are the only 3 I'd look at. Yum Brands is really cool. They're the ones that own KFC and Taco Bell. So they own KFC, Taco Bell, plus the 2% yield. Not too shabby. McDonald's is my favorite, though. I own a ton of McDonald's stock. So, okay. MVO. Let's do MVO right here. Hey, try not to spam there in the chat there. Hey, we've already... Hold on here. All right. Here is MVO. I've actually not heard of this stock before. This is MV Oil Trust. Pretty much all-time low. That's unfortunate. Lower than it was in 2007. It must just be a dividend play. Let's go see the dividend. Yeah. So a 35% dividend. Let's go see if it is safe. Judging by the stock being an all-time low, I'm going to go no. What's the market cap? Yeah. Well, I really shouldn't even be looking at this one. This whole company's worth $30 million. So the whole company's worth $30 million. Let's go look at their financials because that's, I guess, what matters the most. So the revenue, whenever this loads, this is the lifeblood of the company. Oh my goodness, that's terrible. The revenue's down to 52% and the revenue's only $2 million. The growth is that sucks. No wonder this stock is pretty much at an all-time low. There's no revenue, $2 million revenue a quarter. Unfortunate. And we can see how much the dividend cost. Cash flow statement. There's not many cash dividends paid, or maybe they haven't paid dividends recently. I don't know. Anyway, fortunate. What's the app called? Hey, what up, Richard? By the way, this is actually a software, a brokerage where you buy stocks on. If you want to get this brokerage I'm on, it's in the link tree in my bio, that very first link there. Someone said Rock Castle. Hey, Marco. Yeah, hey, if anyone has a stock you want me to look at, let me know what the ticker symbol is. At the Webull platform. I don't know if I was showing this. I'm not sure. By the way, these are all brokerages. These are all, platforms where you buy stocks on. They all send you a tax form at the end of the year. They're all in the link tree in my bio. Not sure which one you're talking about there. The one I'm on right now is my very favorite one, the one I'd recommend the most. It's completely free, costs nothing, no commissions. It's the very first link in the link tree in my bio. That's the one I'm on right now. All of them are linked up there. Okay, let's see here. Dan says, can you check my company Flutter? Let's do it. So FLUT and NVVE. Hey, what up, Eric? Yeah, we'll look at NVEE after this too. Sure. Let's do it. Hey, Rich Tech Robotics is some junky momentum meme stock. Maybe we'll cover them, but I have nothing good to say about Rich Tech Robotics. No fundamentals there. So here's Flutter Entertainment. This is a $33 billion company. Let's go check out their numbers because they have been struggling. Let's go see. Yeah, so they an aggressive gap down on earnings. So there must have been something investors didn't like on their earnings day. So they met on revenue. Oh, a bit. Ooh. So they were expected to lose 70 cents of EPS, but they lost $3.90. That's a big. Oh, and the EBITDA too. They were expected to lose $1 million of EBITDA. They lost $800 million. So yeah, the net income was negative $780 million, $300 million. That was real. Yeah, so they used to make a bunch of profit every quarter, but there must have been some sort of like, oh, so it looks like last quarter they bought a company for $3 billion, and had to issue $3 billion of debt to buy it. This might be acquisition related. I don't know. I wish I gave you more thoughts on them. Oh, so they're in the Vegas industry. We'll just say, is there? No, there's not. Okay. Anyway, I don't know about that one. I'd probably be careful with that one. So in VVE, we could look at Climb. And what up, Nathaniel said Novo Nordisk. We'll check them out too. Well, sorry if I'm missing some stocks here. Like I want to get to Palo Alto Networks. Remind me to get to Palo Alto Networks. Like DEFT is pretty junk, or DeFi Technologies, no fundamentals there. Hey, we're not going to cover this stock. Yeah, if you look at the top, sorry if we just don't cover these kind of stocks. If you look at the top right, this whole company is worth $7 million. They're at an all-time low, and they're a penny stock with 22 cents a share. And they deserve to be at all-time lows. They lost 15 million of net income in this quarter, and the whole company's worth 7.5 mil. And they have more liabilities than assets. Like, I don't know, besides some sort of short-term swing trade or something, and I don't know why you'd ever want to buy that. Okay. Oh, let's get NRP is Rockcastle stock. I look up NRP and I can't find that stock, and I'm looking for there. I see natural resources, but I can't find that one, unfortunately. So let's pull up Palo Alto Networks right here. This is one of my favorite cybersecurity stocks, and Nancy Pelosi owns this one too. If you go to the Nancy Pelosi portfolio, she owns, Visa, CrowdStrike, Netflix, and Palo Alto Network. Probably my favorite cybersecurity stock right now to buy. Not financial advice, of course, but they're a subscription model company. Basically, half of all their revenue comes from their subscription model. And check this out. It literally just hits a new record every year, every quarter. That's what you want to see in a stock. And that's what justifies them. And that's how you can trust them. So their subscription revenue is at a record. Support revenue also at a record. Up 11% year over year, and their product revenue at a record as well. So everything here is headed in the right direction. They're printing net income every quarter, 200 to 300 mil. They actually had a record 500 mil this quarter. It was a one-time adjustment, but everything about this company I love. Like, cybersecurity is part of like the software. Like, if you look at a lot of software names like Salesforce, Adobe, they're getting and even Duolingo, they're getting hurt by the AI thesis. DocuSign. But I think cybersecurity is immune to that. Like, hackers will utilize AI and get better at hacking, and the demand for cybersecurity is just ever going to be increasing, I think. So, yeah, I love them. So, just some momentum companies. Oh, they just reported earnings. So, you know what? We can look at their earnings report. Is there no analyst expectations here? So a big miss on revenue. Look at that. Analysts expected 31 mil. They only did 22 mil. They missed on EPS by half, and they missed on EBITDA by a huge chunk, by more than half. So just judging their numbers, I can kind of see why this stock is down 17%. Those were not good numbers, or according to what the analysts expected. Huge triple miss quarter. Miss on revenue, or a big miss on revenue, big miss on net income, and a big miss on EBITDA. And that's kind of the formula for a stock crashing. I don't know. I'm missing. Okay, what up, Beaches? CLMB. Then we'll get to Novo Nordisk. SQQQ. Yeah, that's the short QQQ ETF. It's like a way to buy a put without. So here's Climb Global Services. They're on my watch list. I forget what they do. Distribution. Whatever this is, the growth rate, the year-over-year growth rates are insane. It's up 38%, after grew 54, after grew 20. So the revenue is just at a record. 73% of the revenue is the US. And looks like they are making net income every quarter. Look at that. Easily 5 mil of net income every quarter. Sales are up 35. What's the market cap here? So here's the interesting part. The whole entire company is worth 470 or 480 million. I normally don't love companies that are worth 480 million, but out of all the companies that are worth 400 million, I want to buy the one with those crazy growth rates, and the one that makes net income every quarter. This company actually makes 5 mil plus in net income every quarter. So it's kind of the interesting part there. So yeah, SQQQ, this is the inverse QQQ ETF, just from how math works, this will always spiral to zero. So you always swing trade this. You never just buy and hold this, but it does the opposite of whatever QQQ does. And I think maybe it's 2x leverage. I don't know, but whenever the QQQ is going like this is up 4.3, that means the Nasdaq should be down 1.1, or I don't know. Let's go check QQQ. Or if it's not, oh wow, market just fell even more. It's down 1.4. New intraday low right now. Yeah, just don't check your portfolio. Hit the like button on the stream for me. We're losing a lot of money today. But I'm not too worried. I bought the dip already a little bit, not too well because it's already down a bunch. But we bought Iron Mountain today. We bought CorMedix stock. And we bought Webull, which are, since my buys right before the stream, is down another 10, 15 per. Okay, so here's SQQQ, just a inverse kind of QQQ. So here is Novo Nordisk. I feel bad if you're a shareholder because this one hasn't done too well. But Novo Nordisk, this is the company that owns Ozempic. You know, Elon Musk is on Ozempic. It's that weight loss prescription or injection. Novo Nordisk launches $199 introductory price program for Wegovy and Ozempic in the U.S. So yeah. That's interesting. Highest Ozempic dose remains at $499 a month. So Novo Nordisk reduces Wegovy and Ozempic prices to $350 a month from $499 a month for existing cash-paying patients in the U.S. Okay, so the president was saying something about wanting to get the cost down, and it looks like it's headed in the right direction. So yeah, this is a pure weight loss play. If we look, 93% of all the revenue comes from their diabetes and obesity care products, which is of course Ozempic, Wegovy. But if you're wondering why is the PE ratio collapsing, why is the PE on this one 13 when the industry average is 23? Well, that's because they actually lose their exclusivity for Ozempic in a couple years. So they kind of lose their patent on Ozempic in legit a couple years, like 2 or 3. And they did miss on expectations this quarter. Like they're already losing the growth a little bit. Like analysts expected 12.1 bill. They only reported 11.7. But anyway, in their margins fell a bit. If we go to the revenue grew 10%. So the sales are up by 10%, but the net income fell by 22. And that wasn't some one-time adjustment either. Like the net margin went from 38 to 26. So and you get a great yield here, a 4% yield. But yeah, I think that the risk reward might be pretty decent here though, because it's probably mostly priced in. I don't know. That's why the multiple's already so cheap. ET, I love the dividend and low beta. Hey, what up, Nathan? Yeah, hey, ET, this is actually not a stock. This is a unit, or this is actually an MLP, which stands for Master Limited Partnership. And you're not a shareholder, you're actually a literal partner in the company. So the only thing I hate about these is the fact that they send you a K1 tax form at the end of the year, which are notoriously hard to fill out. I accidentally bought 2 MLPs my first year investing. It cost me a couple $100 with an accountant to get it filled out. It sucked. So this is unlike no other stock we've looked at pretty much today gives you a K1 tax form. These are unique because it's an oil and gas pipeline company, but you basically buy this to maximize your dividend income. You get the 7.8% dividend, which is sustainable. But the stock, is the same price that it was in 2018. So the stock is the same price that it was in 2018. You don't expect them to really outperform in the long run, but you get the nice sustainable dividend. So yeah. Let's see here. Yeah, they're a nice old. And actually, here's a little life hack. If you want exposure to MLPs, but you don't want to get the K1 tax form, you can buy an ETF, ticker symbol AMLP, which owns a bunch of MLPs. I think ET is one of the top holdings. Yeah, ET is 12.5% of the ETF right here. It owns a bunch of these MLPs, which have the high dividends. So you get the 8.5% dividend yield, and you don't get the K1 tax form. So that's what's kind of cool about, that's what's kind of cool about AMLP. Okay, Hood or SoFi, which you prefer? But you can't ask me that. Yo, both are the real answer. Hood, I own both of those. But if I had to just pick one right now, I don't know, Robinhood. I'm down 1% of the day. We're going to zero. Hey, what up, JVM? Yo, what up, good time? In Nakia, how's it going? And Freemy, what up, Freemy? Good to see you, homie. What up, Kadu? Just let's see here. Someone said, I don't usually buy medical, but CRSP interests me. This is the Kathy Wood stock, CRISPR Therapeutics. It's the gene splitting company. Unfortunately, there's a high, what's the short interest on this one? 24% of all the shares are being shorted, and I can see why. Just they don't have any real like products and sales yet. If we go to the revenue route right here, actually, if you're wondering why does it say 35 mil of revenue, they actually sold off an asset. They sold 100 million of their own assets to get that. So it's not like they sold a product. They literally sold off their own assets to get 35 mil, but they didn't do that for that reason. But this company has no revenue. When you exclude that, they're making 800K a quarter. So they're making 800K a quarter in revenue, but they're losing legit 100 plus million of net income a quarter. That's the thing that is hard for me to really trust. You're buying like a lot of future hopium with because there's no revenue pretty much, and they lose 100 mil of net income a quarter. So just for those reasons, I wouldn't trust it with a lot of money. 5 bill market cap. But it's tough. That's the thing. Yeah, I don't know about them. Hopefully that was helpful there. I don't want to but yeah. I sold calls on Futu. Hey, Futu reports earnings this week. I can't wait. Ishwar, what up, homie? Hope you're having a great day. And hey, I'm doing great, Nikia. Hope you are too. So let's pull up AMPX right here. Yeah, it's down 9% of the day. Do you know why the big dip? I don't know. It might just be the whole dip of like everything right now. Like if we just go, well, it's not crazy, but yeah, AMD's down 3.6, UiPath is down 5, Robinhood is down 7.7. So it must just be a high beta name. Reddit's down 4. So yeah, hit the like on the stream for me. Our portfolio is not doing too well today. Yeah, Supermicro is down 7. So maybe I actually don't know what this company does exactly, but maybe they're super AI related, and so they're a $1.3 billion company. Let's go check them out. Oh, so sale of battery products. Oh yeah, so check out what the analysts are expecting here. This is kind of what's crazy. First off, they beat every quarter. Like they expected 16 mil of revenue. They did 21 mil, a really good beat. And if they beat like that on these 2 quarters, they should be doing close to around now 100 million of revenue a year. If they're really going to do like 23 mil a quarter, it's basically 100 mil of revenue a year. And they're narrowing their losses. They only lost 4 mil. It sucked when they were losing 10 mil a quarter, but they've significantly narrowed their losses with the growth of the sales. Yeah, look at the revenue. It went from 7 mil to 21 mil. Still, I wouldn't trust a lot of money in this name just because still the numbers are still so tiny, but they're certainly interesting with this growth expectation. Yeah, battery related, AI related. Yeah, that's probably why it's probably just momentum. I wonder if there's any short interest on that stock. Oculus. Hey, do you mean Oclo, or do you maybe mean Oracle? I think Oculus is actually owned by Meta. I'm pretty sure Meta actually bought Oculus back in the day. Let's see, is there short interest? Oh, wow. Look at how the short interest literally went from 2% to right now it's 12%, which isn't crazy high, but looks like the short interest did kind of spike up a little bit recently. Probably just as the stock is going higher. All right, let's see. I have no financials in my port. Any recommendations? Like fintech companies, I love SoFi, not at this price, but SoFi, Robinhood, Dave is looking pretty good even. Like, what's the forward PE on Dave right now? So they're trading at 16.6 times next year's net income. Yeah, I like Robinhood, Dave. T Rowe is basically pure dividend play. SoFi, yeah. Oh, Webull as well. Bull, Futu. I love both of those. Hey, what up, Charles? How are you today? Yeah, so, well, here's a stock that I find fascinating. I haven't really talked about it on this stream much, but because I talked about it so much on the other streams, but this is probably one of my new favorite stocks of legit all time. Top 2, top 3 best stocks I've like ever analyzed in terms of financials. So I bought the stock at an all-time high. I didn't mind paying an all-time high because this is the kind of stock that's just going to continue to climb higher and higher. And I just think this is going to have the same returns, if not a little more, than the S&P 500. So I bought ticker symbol HCA. But today I bought Bull stock. I bought more Bull. I bought another share of Iron Mountain. It's $89 right now. Well, we bought our share at $90. So we've definitely, the market's fallen a little bit more, but we also bought some Cormetics. But yeah, I bought Iron Mountain, Bull, Cormetics today. But 2 days ago, I bought 4 shares of HCA. Real quick, if you're wondering why I bought HCA, I made a YouTube video about this already, so I'll be super quick about this one. But yeah, if you watch my second most recent YouTube video, you'll see my whole analysis on this company. You'll learn more. But it's literally the Webull app. all my other apps are working fine, but Webull just wants to not work right now. Okay, HCA Healthcare. Okay. The forward PE is a 17. They legit, even though they're at all-time highs, the forward PE is a 17. They pay a dividend. The dividend costs 72 cents a quarter. So the dividend costs 72 cents a quarter. They made $6.90 of net income this quarter. And in terms of free cash flow, it was $19. Like they can afford to 3 to 4x their dividend right now. They just choose not to. Or let me go back to the net income right here in the margin. So if you go to the revenue is up 9.5. Sales are up 9.5, but the net income is up by 28, which means they're expanding their net margins. Net margins are up 18% year over year. This quarter was a big beat. But check this out. So they pay a dividend. The dividend costs so little. The dividend only cost 166 million of net income a quarter. How did the cost of the dividend go down? Like, why was it just 180? Now it's 166. You're not going to believe this, guys. This is right now the reason I bought this stock is how much they're doing in share buybacks, how shareholder friendly they are. They've bought back year over year 9.6% of all the shares. After they bought back 5% of all the shares, after they bought back another 5% of all the shares, after they bought back 10% of all the shares. And this is just since 2020. Like in 2020, the total shares were 339. Now in the most recent quarter, it's 229. Literally, whenever there's less shares that exist, it pretty much forces the stock to go up, gives you more ownership, makes the cost of the dividend go down, makes the PE go down, EPS go up. Anyway, and they can easily afford those share buybacks too. Anyway, if you want to learn more about them, how they're the number one market share for hospitals and surgeries, and number one talent, go watch my second most recent YouTube video about them. Hey, what up, boss? He said, check out HON. So Honeywell, they're actually one of my favorite quantum names out there. They have this company like they're about to IPO and go under Honeywell or something. But anyway, yeah, check this out. They have their aerospace business right here. It's growing double digits. It's up 15% to a new record. Not too shabby. If you go to their net income right here, it's really consistent, easily 1.5 or more billion of net income every quarter. Sales growth is a little bit slow, but I think they just they spun off one of their businesses into a different ticker symbol. But yeah, you get a good dividend, a 2.3% dividend. I'll just remember if I can't find it within 10 seconds here, then I won't do it. But if we go to their investor, nah, this isn't the IV page, bro. So it would take too long for me to find. But interesting quantum play. Just bought back my call on Futu. Didn't realize I have earnings. Hey, yeah, that's probably a good idea, Luffy. Hey, what up, Trevor? Yo, I know you from Blossom. What up? Shout out to the homie Trevor. Good to see you, man. Hey, can you look at me? What up, Slido? How's it going? Let's do Zeta right here, or Zeta Global. Let's check out this one. I think there's some AI software. Looks like they're down 7.2% on the day. But what's impressed me about Zeta, I wonder if there's a AI earnings hub. Let's check this out. So their customer base expanded 20% to 572 customers, with 180 super skilled clients generating higher average revenue, AI-driven enhancements, the launch of Athena, announced acquisition of Marigold's enterprise software business. Okay, so what I've liked about them is they've been beating on expectations every quarter. So they beat on, that's the orange line, they beat on revenue the past 3 quarters. It's like a slight miss on EPS this quarter, maybe from the acquisition. I don't know. But yeah, basically free cash flow was a record, up 69% year over year. I like how growthy they are. Look at this. This revenue's up 25, after grew 42, after grew 25, after grew 32. So they're on a nice streak of growth, and they're super close to net income positivity. Probably by the same time next year, they will be EPS positive. They only lost $3 million of net income this quarter. But look at the year over year comps. They're losing 80% less than they did the same time last year, 54. So that's really great news. We can check out their website too really quickly. zetaglobal.com. I still don't know exactly what they do. Super intelligent agents, or why Zeta? I wonder what they do. Stop settling, start winning. What is this? Anyway, their numbers are interesting. Wonder if they have a moat too. Is there any Morningstar research on this company? Morningstar research. I don't know. Anyway, yeah, hopefully that was helpful. I don't know. So would have been profitable without the one-off expense. Oh, okay. Maybe it was from that acquisition. Yeah, 17 beats and raises in a row. That's crazy, Trevor. That's crazy. ISRG is good trust. ISRG is a big medical robotics company with a fortress balance sheet. You won't believe this. I'll start with their balance sheet because it's so impressive. Check this out. ISRG has $5 billion of cash, and that cash isn't just sitting there doing nothing and no debt at all. Completely debt-free company with $5 billion of cash. And if you go, income statement, you can see they literally made an interest $95 million of interest on their cash. Most companies right now in this high interest rate environment are paying negative interest because they have so much debt. But since these cash-rich companies, the ones with no debt and a bunch of net cash, they can keep these into these 1 to 3 week treasury bills, short-term investments, 1 to 3 week treasury bills, and just milk interest on them. So that just adds even more to their bottom line. But they're already printing money. They're making pretty much $700 million of after-tax net income a quarter. So you can see they make these medical instruments and devices. That revenue is up 20%, after grew 18, after grew 23. And they also service these machines. If we go to the services revenue right here, that's up 20, after grew, like everything just hits a new record every year, every quarter. Like the growth is just great on this one. Yeah, the systems revenue is up 32. So they don't pay a dividend, but they make up for it in terms of just stock price appreciation and capital allocation. I wonder if they're doing buybacks. Net income is up by, here's a quick way you can tell if a company does buybacks. The net income is up by 24, but the EPS, which is net income per share, is up by 25. So they bought back just under 1% of all the shares in the past year. So they're not diluting you, which is good. Anyways, I'm taking off, brother. Hey. Oh, yes, acquisition related costs. Check out Wealthmatic on that. Oh, hey, see you, Trevor. I appreciate you, man. Yo, if anyone wants to hit the follow button, we actually stream every single day. I sell nothing. I have no course, book, WhatsApp, Telegram, literally nothing. And I'll never follow you, DM you, nothing like that. Yeah, watch out for people impersonating me. All right, so let's see here. UNH stock. I know Warren Buffett bought them last quarter. BB. Well, actually, let me cover this one first. BBAI. I see like 3 people asking about this one. I don't love this name. Let's see if there's any weekly news. Big Bear AI reports Q3 results and announces Ask Sage acquisition for $250 million. So that's good news. Big Bear secures U.S. Air Force contract for predictive intelligence platform. The contract is worth $3 million. I'm curious to see how this acquisition is going to change their revenue because let's see here real quick. Yeah, so look at this. You go to their cash from investing activities. If this is negative, that means they just bought an asset, bought a company, whatever. So they spent $260 million. If this number was positive, that means they're actively selling out of their assets. So they just bought a company for $260 million. That explains why the assets on their balance sheet just bumped up to $900 million. That should add more to the revenue growth. Well, that's weird. So they bought a company for $260 million. And even after integrating that business, the revenue fell 20% year over year. And they lost 20 mil. So that was a bit, but that beat expectations. Actually, that is good that was a beat on expectations. I don't know. They're down 9% on the day. I wouldn't have it as a major size position. I bought a lot of ISRG before earnings. I remember that, Luffy. I remember that. Yo, that's a great never sell stock. Okay. NNE. So, then we can look at Iron Mountain. Maddie says, Zeta has a beautiful monthly chart. Heads to 2017. Hey, nice. What up, TTV? So here's Nano Nuclear Energy. This is one of the smaller nuclear plays that I don't really trust. They have no revenue. If we go to the revenue right here, it says 0 because they've never sold anything. They've never sold a product or a service. This is a startup. They want to make these SMRs, these small modular reactors. If you didn't know, there's only 3 working SMRs in the world, and none of them are in the US. So this pretty much just trades off nuclear momentum. But if I was going to pick out of all the nuclear stocks that exist, I don't want to speculate on some startup. This is, in my opinion, the best nuclear stock that exists by far. No close second. This is ticker symbol CEG, Constellation Energy. They literally own 30% plus of all the US's nuclear reactors. Number 1 nuclear play, number 1 geothermal play, and I think they're a top 5 natural gas play. At my house, our utility bill, natural gas bill is through Constellation Energy, but their best thing about them is their nuclear assets, which is, I think, going to be in such demand. All right. Let's see. We'll look at some more stocks here. Wassinator, what up, homie? Talking about buybacks. Do you think UPS uh, kept their dividend high because so high because okay, here's UPS right here. This one actually had a good earnings report because they announced that they were able to like drag the tariff cost onto consumers. But so they beat on revenue, they beat on EPS, and they beat on EBITDA this quarter. It was a triple beat quarter, but even though they triple beat, they still couldn't afford the dividend, or they haven't been able to afford the dividend in the past 3 quarters, and the sales are negative. Like, it's unfortunate, but look at this. The revenue is down 3.7. Their average daily parcel volume is down like 10%, and the money they're making on it. But look at this. So the sales are down by 3.7. The net income is down by 15, but they're still making money. So some people are like, hey, but they're still making 1.3 billion net income a quarter. But look at this. They made 1.3 billion exactly of net income this quarter, but the dividend cost 1.35 billion of net income every quarter. So they literally cannot afford the dividend for the past 3 quarters. That's what sucks about UPS. So that's why, honestly, they need like a healthy dividend cut, a 7% yield, but I don't feel too safe about that 7% yield because of the choppy payout ratio. They couldn't afford it for the past 3 quarters. The sales are negative. So I don't know. Let's see. Are they doing any share buybacks? Net income's down by 14.8. Yeah, net EPS is only down by 13.8. So yeah, they bought back 1% of the shares, but yeah, imagine they said, all right, we're completely cutting the dividend and we're switching it all to buybacks. That'd be interesting. But yeah, a lot of people just like them for the reliable income. Let's see. Vicor. I don't know. Hey, if you got a stock, give me the ticker symbol and we can check it out for you. Thoughts on NVIDIA once earnings drop. So yeah, we're pretty. I guess I can give you my prediction, but that's about it. I think NVIDIA is going to do great, and they're going to go over $200 after earnings. That's just my random. I'm not betting any money on it or anything. But I just have a feeling, and that's not good enough to put money around. But I just have a feeling they're going to go to $200 plus. Seaport, or I don't know. Let's go look at their numbers really quickly. Again, they report earnings this week. So if you buy the stock now, it's kind of like you're betting into earnings. But check this out, 24% PC GPU market share. They have an automotive software, but mainly they sell chips to, the most cash-rich companies, Oracle, the Mag 7, OpenAI. They legit, the revenue this quarter was $46 billion. That's the top line. The top line was $46 billion. But the net income was $26 billion. So they legit have a net margin of 55%. So if you go spend $100 on an NVIDIA chip, they keep $55 of that even after paying taxes. So yeah, that $26 billion includes $2 billion plus of taxes they paid. So pretty cool. But the law of large numbers, it's a tough double. Like if we look at the market cap, NVIDIA's worth $4.5 trillion. If you just buy a share right now for you to double your money, they have to be worth $9 trillion. So Matt said, what app is this? Yeah, hey, what up, Matt? By the way, this is actually a brokerage, a software where you buy stocks on. It's my favorite one. If you want to get it, it's in the link tree in my bio, that very first link there. Free broker. Hey, thanks for showing up, Plasma. Thanks, Jace. I appreciate that. Yeah, hey, best way to support me is to watch the stream from YouTube. Let's see. Short Target. Yeah, Target is another one that's kind of well, actually, they have a more sustainable dividend. What's the short interest on this one? 4% short interest, not that bad. Honestly, if I had to pick between UPS or Target, I'd rather pick Target if I had to pick one. And I still wouldn't buy Target, but look at this right here. Well, you buy this pretty much to maximize your income. You get a 5% dividend, and the dividend payout ratio really is a 50%. But the reason why Target, if we look at their stock versus like a Kroger or a Costco or a Walmart, the reason Target is being hurt so much more is because they're less of a grocery store. They sell more discretionary items, like household essentials, apparel, home furniture and decoration, hard lines, and beauty products. All the beauty stocks are at all-time lows. Not all-time lows, but like Elf Beauty, Ulta, they're struggling. But yeah, if we go to the revenue on Target, they lost the growth. The sales, the revenue is negative. Revenue is down 0.95, and the net income is down by 21. But they still make 800 to $1 billion of net income a quarter. And let's go see how much the dividend costs. So they're making around $1 billion in net income a quarter. The dividend cost $509 million. So as long as they're making a good chunk over $500 million, the dividend is safe. But again, sales growth is negative. It's such a competitive industry. 3-4% net margins. They're kind of being out innovated by Walmart and Amazon because their online presence. Pretty much anything you can get on Target, you get on Amazon. And I don't think Target will deliver the stuff to you like Walmart and Amazon does. So I don't know. They could just turn into like a Walgreens one day. Oh yeah, Walgreens already got taken private. Okay. All right. That's the ticker, VICOR. Oh, VICOR. Oh, well, let's try and find it out. Check out Barclays. Hey, what's the ticker symbol for Barclays? Hey, what up, Lopez? What's up, Nathan? Thoughts on today's sell-off? Yeah, hey, I've been buying the dip a little today. I've been nibbling on the dip. Specifically, I bought Iron Mountain, IRM, a little bit of Webull, and a little bit of CRMD. So the ticker symbol is actually VICR for this stock. So this is Vicor. I've never heard of them. They're a $3.8 billion company. They had some apparently amazing earnings because they had a massive gap up on earnings day. Let's go see if we can figure out what happened here. So advanced products. Looks like the revenue's up 33% to a new record. That's great news. That must have beat expectations. Yeah, so the analysts expected 94 mil or 95 mil. They did 110 mil. And like a 5x beat on net income. No way. They expected 11 cents of EPS. They did 63. And triple beat on EBITDA, or a 3x beat on their EBITDA. So that's why the stock gapped up so aggressively. If I had to guess, their brick products that also grew year over year. 51% of the revenue comes from the US. But anyway, yeah, they're making good net income every quarter. 30 mil, 40 mil, what's their balance sheet like? Fortress freaking balance sheet, legit, no debt at all, completely debt free. Let's see how much cash they have. 360 million of cash from 260 that made them interest. So anyway, I'll put them on the watch list. Interesting. It includes the AC to DC converters. Well, hey, that kind of reminds me of like an in-phase energy. What is this? High density power conversion optimized for, okay. Well, all right. Let's see here. Sezzle. Let's look at Sezzle right here. Do you think if NVIDIA beats that could change the momentum of Core even APLD? I think so. Hey, Nathan, not sure if you covered yet. Netflix stock. Hey, what up, Sharkwater? Good to see you, homie. Yeah, Netflix did do this stock split today. So Netflix is only 110 a share now. We can cover them too. That doesn't change the valuation of the company, just makes it psychologically easier to buy shares. Same market cap, same valuation. But here's Sezzle right here. This is a fintech, and they're at a great valuation, I think. Like a 15 PE. What's the actual PE right now? Yeah, 15 PE. Really cheap. And they shouldn't have that low of a PE ratio, in my opinion, especially for the net income growth expected. EPS is supposed to be $1.19 in 2 quarters. The revenue is supposed to... The growth is insane. Let me pull this up right here. This is why I'm a believer that financials will outshine in the long run. But the sales are up 66% after it grew 72%. And the net income, they're net income positive every quarter, easily making over 100 million of after-tax net income a year. Is there like a high short interest on this one or something? I mean, 10% short interest. I wonder what the short theory is, but their numbers are really good. I do really like their financials. So, yeah. Okay. Okay. Let's do Meta real quick. What up, Richard? What up, Slido? So, yeah, here is Meta Platforms right here. One of my favorite stocks to just buy and never sell. I do own Meta, full disclosure. So if you actually go over here, this is called our dividend-only portfolio because every stock in here pays a dividend. One of the stocks we own is Meta. It's our smallest position in here. I got 5 shares of them. But if you have the intention like me to never sell them, I think they're worth buying right now at this price. Like, they're such a good company. The PE is a 26. The forward PE is a 20. A 20 PE on Meta. I mean, that's fair for a Mag 7. They have 3.54 billion daily active users. They're introducing ads to WhatsApp, which is a nice tailwind. Ads on Threads. The Threads app now is basically the same amount of daily active users as X, which is crazy. But the one reason that they gapped down so much in earnings was because of a one-time tax adjustment and their heavy CapEx spend. But this was a one-time adjustment. Since the net income fell 82%, it actually grew 18% year over year. First ever $50 billion revenue quarter. It was this one-time tax adjustment that hurt the stock. And this as well. If you go to their cash from investing activities, they're spending 20 bill plus a quarter now on AI, data centers, all this stuff. And investors are definitely questioning it. You know, Apple's been rewarded because they're not spending on AI and heavy CapEx. But yeah, let's hope Meta can get real returns on those investments. So, BARC is the ticker for Barclays. Or no, it's here. It is. It's down here. BCS is the ticker for Barclays. We found it. I think they're like some bank or financial institution thing. Let's go see. So yeah, pretty much all-time high. Yeah, the stock looks almost identical to JP Morgan. So let's check out the yield. So even if you buy the stock right now at all-time highs, you still get a 2.2% dividend, and the payout ratio is only at 23%. So yeah, investment bank is their main business. Barclays UK, Barclays US, corporate. What is this? Private bank and wealth management. So if we just go to net income down here, yeah, this is in USD. We've converted it from British pounds to USD because they're not a US, but they legit every quarter, if you average it out, they're making like 2 billion plus of after-tax net income every quarter. So plus the 2.2% dividend yield, not too bad. Do you think it's a good time to buy the GLD Spider ETF? Yo, I am about to save you some money. You ready for this? So here's ticker symbol GLD. This is literally the commodity of gold publicly traded, and it's almost always arguably better to buy this ETF over physical gold, especially if you're buying in smaller quantities or if you're buying in large quantities where you have to pay to get it stored in vaults or whatever. And you pay the spot fee when you buy and sell it, and you buy in smaller quantities, you get screwed. GLD is literally the commodity of gold publicly traded. But look at the expense ratio fee. They have a 0.4% expense ratio fee. So for every $1,000 you put in, you have to pay $40 a year in expenses. But here's a little life hack for you. And here's it overlaid. This is the exact same ETF, exact same strategy, exact same thing run by BlackRock with a way lower, only a 0.09% expense ratio. So basically what I'm trying to say is you'd want to buy IAUM over GLD. There's also, a lot of people know QQQ. You'd always want to buy QQQM over QQQ because it's literally the exact same thing, exact same NASDAQ 100 strategy, exact same holdings, exact same weightings, exactly. Also run by Invesco, but with a 0.15% lower expense ratio fee. So I say $15 a year for every 1,000. Okay, let's see here. Hey, later, gate this. See you later, man. Thanks for showing up. Yeah, if anyone wants to hit the follow button, we stream every single day. We'll probably end the stream in like 10, 15 minutes. I have to go, sadly. But hey, we were streaming for 2 hours now. Let's go. I wanted to pull up Netflix real quick. Then we can look at TME. I think that's like Tencent Music. Look at AMAT. Remind me to get to some of these in like CNXN. Hey, what up, Nathan? Good to see you. What was the ticker for the less expensive one? That was QQQM for the NASDAQ, but it's IAUM was the other one. It was for the gold one. Even if you literally compare GLD versus IAUM, the differences, there is no difference. They have moved perfectly identical, not like by 1% difference, like identically. So it is this. Okay. What was we were just looking at there? Netflix stock. They did the reverse or the stock split today. So if we look at the current share price, it's 110 a share. When before today, it was 1,100 a share. So it does nothing besides, the pizza is the same size, but we've cut the pizza up into more slices. So It just makes it easier to buy. But yeah, they're still, the market cap's the same, $460 billion valuation. I love Netflix. I'd love to own Netflix, but at a much lower valuation. A 46 PE is a little too high. The PE ratio is the price of net income. They trade at 46 times net income. But check this out. They make $11.69 per paying membership per month, and there's 300 million premium subscribers. Pretty crazy. But check this out. This is what I love about Netflix. They make every quarter 2 to 3 billion of net income every single quarter. And at this growth rate, what's it going to be the same time next year? And this was partially offset by a one-time Brazilian tax charge of 600 million. So anyway, I love Netflix, but valuation's still a little too high. But all of them are, like, if you look at Spotify or like Life 360, they're all really expensive. What should I buy instead of gold? Yeah, hey, I missed it. Hey, it's all good. That was IAUM, exact same ETF. By the way, I'm also streaming on YouTube. If you're missing anything, you can like rewind it on YouTube. YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, just type in YouTube Nathan Robert. So let's look at TME really quickly. So I'm a little behind on some stocks right now, so I do apologize. But we were actually, this one's on my watch list. We were looking at this one a while back. They're Chinese, so the stock just sucks, unfortunately. But they have great numbers. Or what I mean by that, like the performance just doesn't do good. The PE ratio stays low. They're the same price as they were, back in 2019. But here's what I love about Tencent Music. Did they do a yearly special dividend? Oh, they do. So that's actually pretty cool. So you get a 1% dividend with this company. So premium subscribers, they got 125 million premium subscribers. It's basically Chinese Spotify. So yeah, online music services, but check out the net income. This is the best part right here. Oh, so we're going to convert this from Chinese yuan, to USD. The growth rates are like they make every quarter, and that's after paying, 30 mil of taxes. We're in China, but anyway, they make 300 mil plus a net income every quarter. So they really do make good net income and a fortress balance sheet. Check that out. I wonder if they're, how much cash they got on hand. 4.2 bill of cash. Does that earn them interest? It does. They made 29 mil of interest on their cash. Since they have so much net cash and no debt, they're making interest on their cash. Anywho, yeah, they're beating on expectations every quarter, which is good. So looks like their monthly active users is a little bit flat year over year, or is it slightly down? It went from 576 to 551. So, but look, their ARPU, it grew. So the money they're making per user is increasing. So their margins are going up. Maybe they're raising prices. Maybe they rose prices, lost a little bit of subscribers, but the net is still a benefit after a little bit of churn. Oh, I love AMAT. Oh yeah, did we forget to get to that one? What app is this? Yo, here, Miracle. What up, dude? Yo, by the way, this is actually a brokerage software where you buy stocks on. It's in the link tree in my bio, that very first link there. If you're on YouTube, it's actually in the link in the description, the very first link there. Yeah, my favorite software. Okay, so should we look? Let's do SoFi. You know what? Let's do SoFi Technologies because this is one of my favorite stocks. I do own them. I'm totally biased, but we're up great. We're up like 4x on our SoFi shares. But check this out right here. My Wi-Fi is extra slow today. That's not good. But yeah, SoFi, I believe, deserves all this momentum that they've had. I wouldn't be so happy. Yeah, well, okay, bet. After this, we'll look at AMAT after this for sure. Next stock is AMAT. But SoFi, yeah, down 4% on the day. Here's my position. Hope that doesn't show my password there. Oh, well. Why did it make me re-log in? That's weird. Maybe we've been off this app for so long, but yeah, look at this. A lot of our fintech stocks, like Robinhood's down 7.4, Dave's down 5, T Rowe's down 5, SoFi's down 4, Supermicro's down 7. So hit the like on the stream for these L's we're taking today. But SoFi's a stock that's not just propped up on momentum; they have great growing fundamentals. I wouldn't pay its current valuation, but they're certainly what I put on my watch list to try and buy eventually. They have their own banking charter. If we go to their financial services right here, it's up 76%. After grew 101, after grew 140, after grew 260. Like the growth rate is growing. It's insane over there. And and they think it just announced crypto buying. Check this out. SoFi Technology launches cryptocurrency trading as the first U.S. chartered bank to do so. Pretty interesting. They have their own banking charter. They're making over 100 million net income a quarter. They're beating on every analyst expectation every quarter. Like that's why people are taking SoFi serious. It was a triple B quarter. They beat on revenue, they beat on EPS, and they beat on EBITDA. And they've done that every quarter for the past couple of quarters. So just really great. Let's look at it. What app are you using? Yeah, hey Davey. Again, this software I'm on, this brokerage I'm on, it's in the link tree in my bio. That very first link there, broker called Moomoo. So let's do AMAT. Then we can pull up like NU Holdings. Maybe we'll get to that one too. I have 5% of my portfolio in SEZL. Hey, that's like a perfect amount of your portfolio to have in Sezzle. I wouldn't be crazy to increase it unless it falls super meaningfully. But yeah, here's Applied Materials right here. The stock has a nice, so a 0.76% dividend, but notice how they raised their dividend pretty aggressively every year, way faster than inflation, 20% payout ratio, so they have room to raise it. The PE, the price to net income, is a 26, and the industry average is 33. So they traded a lower valuation than the industry. Let's see if we can figure out why. So semiconductor systems. Oh, so probably because of the slower growth. The revenue's up 10% year over year. Let's see, what does the earning sub have to say? Oh, nothing. Okay, oh well. But yeah, if we go to their revenue right here, the sales. Oh, is that real? So look at that. The revenue, the sales actually declined 3.5% year over year. So the sales are down 3.5, and the operating profit fell 7.5% as well. So it looks like the sales and the profits just went slightly negative year over year, which, I mean, the stock's still doing great, but that might explain why the PE ratio is kind of below industry average. I don't know. They're interesting name. Interesting name. So yeah, here's NU Holdings right here. So what's your best stock to invest in right now? Well, I don't know, but here's one of my favorite picks. It's AI related. You get a good dividend, and I just like the sector. This is ticker symbol IRM, Iron Mountain. I bought another share today, and I bought a share yesterday, or not yesterday, on Friday. So yeah, we bought a share at 90 and 90. We bought some at 103. So we're dollar cost averaging down on our shares. I think Iron Mountain is definitely an interesting, growthy, a 3.3% yield. Actually 3.5% yield now that the stock's fallen another 3%. So anyway, let's look at NU Holdings right here. It's actually another one of my favorite stocks to buy that I don't own. They're actually a crypto bank. I think they're applying for the US banking charter right now. But yeah, this is actually a crypto bank that mainly does all its business in Brazil right now. It's a crypto bank. And the reason they're in Brazil is because that's the market you want to be in. Because in the US, we don't really use crypto for transactional purposes. It's not too practical. But down there in Brazil, where the currency sucks, they do use crypto to like pay for stuff. But if we just judge them off their financials, this is what I love about them. This is the reason I, not financial advice, buy them and put them on the watch list. They print money, and this is in USD. They made 780 mil in net income this quarter. Last quarter was 640 mil, 500 mil, 500 mil. They make easily $2 billion plus in net income a year. So what's the PE ratio on this? A 30 PE. That's fair. That's worth paying. And the forward PE is a 19. That's insane, the amount of future EPS growth that's expected. We can see the EPS growth expectations right here. Yeah, the EPS is going to go from 11 cents to 17, which is a nice bump. So yeah, there you go. I really like that name. Do IREN, please. So this is Iris Energy. I think they just got a big deal with Microsoft. Let's see if I can find that down here. Weekly brief. Yeah, check that out. First event there. IREN secures a $9.7 billion Microsoft GPU cloud contract deal and a Dell deal or something like that. Anyway, that's interesting. That's going to add a lot to their future growth. That's going to add more to their future growth, but let's look at their right now growth. This is insane. The revenue went from 52 mil to 240 million year over year. And this was a record. 240 million was a new record. But check out what the analysts are expecting in 2 quarters. It's going to go to 285 mil. Like the growth is just going to continue. So they're kind of just being sold off with the whole core. This company is it's nearly identical to CoreWeave and APLD and Nebius. They're all the same thing, just different contracts. But yeah, interesting. What app is this? Yeah, hey, what a wine opener. Yeah, hey, this is actually a brokerage. Again, it's in the link tree in my bio, that very first link there. It's an affiliate link too, full disclosure. So if you go and like deposit $100, we'll both get like some free stocks actually, which is pretty cool. It's an app where you buy stocks on. And yeah, if you look in the middle of my screen, another cool thing is you get a nice APY on your idle cash, 3.6% APY on your idle cash. I just spent all my cash on Amphenol and some other names, sadly. So I'm not. But anyway, I'm a fan of having cash, a little bit higher cash than normal right here. Yeah, oh, this my all. By the way, all these brokerages are all in the link tree in my bio. All these are, I'm not sure which one you're talking about there, but yeah, this one's my favorite one. Free brokerage, costs nothing, no commissions at all. It's free. Okay, let's see. SQQ. Hey, we already looked at SQQQ, but that's basically if you're bearish on the QQQ. So we all know the QQQ ETF, the Nasdaq 100. Whenever that ETF goes down 1%, or whenever that ETF goes down 1%, this goes up by 3%. So it's kind of like inverse QQQ leveraged. Just how math works in this leverage and how it's 3x leverage. This will always, no matter what, spiral down to zero, and it's done that all for eternity. It just keeps on hitting zero, and they keep on reverse splitting, and that trend will just continue to happen for eternity because of all the reverse splits. The share price used to be 2.6 million or something. Oh well, but what I'm trying to say is this is a hot potato. You want to get in and out, like you want to get out of that after you make money. You don't want to stay in this thing for a meaningful amount of time, and that's not something I don't, unless I want some. Tomorrow morning going to be interesting with Futu. I can't wait, Luffy. And this month, Luffy, they're going to announce their special dividend. I bet maybe it'll be on this earnings report, but I think they're going to announce their special dividend. But all right, let's look at probably 2 or 3 more here. Figma stock. Let's pull up Figma. FIG. This is like the competitor to Adobe, and they're at an all-time low today. Literal all-time low. Again, they just IPO'd, so it's not that significant. Is there short interest on this one? So 3% short interest for recent IPO. So what I love about this stock is how growthy they are. If we go to their revenue down here, check out these year-over-year comps. It's up 40% this quarter. Last quarter was up 40, 46, 50, 50. So I like the growth of their revenue. And if we go to their net income, it says they lost 1.1 billion. This was a one-time IPO fee, so they didn't actually lose $1 billion. But because the other 3 quarters are actually net income positive, so if this company does make net income every quarter, it's kind of like a more like concentrated. Oh wow, 18 billion market cap might still be a bit expensive. Wait, they're like 1/3 the size of Adobe then. Or wait, what's Adobe worth? Are they under 100 bill now? Or 136 bill? Since Adobe's at a new basically all-time low, or not all-time low, like 52-week low, Figma's kind of just following that. This brokerage is telling me, what is this right here? There is a, because I didn't draw that, a bearish continuation triangle or something on there. All right. What are your eyes on this dip? Well, hey, I'll be super quick about this because I just answered that. But here's what I bought today. I bought these stocks today. I bought a share of Iron Mountain, IRM. I bought 10 shares of, or actually 15, like 13 shares of Webull. I bought 13 shares of Webull, and I bought like 20 shares of CorMedix, CRMD. And I've been streaming for the past 2 hours. I would have bought more, but I've been streaming. But it looks like the market is having a slight recovery now. Actually, let me pull that up really quickly. Yeah, check this out. The QQQ was down 1.4%. Now it's only down 1.03. So a slight, hopefully that's the bottom. The market closes and, oh, hey, look at this. Your stock has arrived. Look at this. So whenever you guys use my referral, check this out. I get a free $5. Let's do it. So, hey, whoever just signed up for this thing right here, I appreciate that. Here's what I always do. I always go, so whoever signed up, thanks for that. Hey, I got 5 shares of McDonald's. So hey, or it said from Ivan. Thanks, Ivan. But anywho, so yeah. But by the way, if you wanted to get any of these brokerages I'm on, they're all affiliate links. Full disclosure. So if you go and like deposit $100, I'll get like a $5. We both get like a little $5. It doesn't matter. Hey, you can just type it into Google brokerage called Webull. What? Okay, Robinhood. Okay. Few more stocks here. Let's see here. Can you do LUMN? I wonder what Lumen. I feel like I've heard of this one before, like Lumen Technologies. Let's check this one out. Market going up. Yeah, we're seeing a slight little recovery. LUMN, please. Sorry, my Wi-Fi is not good today. I do apologize there. There we go. Lumen Technologies. Dang, if this, well, good thing this is like the last stock we're looking at. If our Wi-Fi, good thing our Wi-Fi gave out now. So yeah, this company was going bankrupt. I remember this. It was $1 stock. It even went under $1, but then they got like a $5 billion new contract, and it saved the company because they like legit were going bankrupt, but they still haven't recognized that revenue yet, and that's what does worry me. If we go to their right now revenue, it still isn't great. You know, the sales, the lifeblood of the company, the revenue's down 4 after it fell 11. After it fell 17, after it fell 10, after it fell 6, it just keeps going. Oh my goodness. Yeah. So they're on a streak of declines, and yeah. So look at the net income. They've been net income negative the past couple quarters. Looks like they now have more liabilities than they have assets. To be honest with you, just not one that's blowing me away. I can't remember exactly what it was. There was some sort of like new contract they got that basically saved the company, or I don't know exactly what that news was. I can't remember, but I don't know if I touched that one, to be honest with you. It looks a bit risky. Jeff Mack, hey, shout out to the member Jeff Mack on the YouTube stream. I appreciate you, homie. He said ticker symbol FLY. So here's Firefly Aerospace, a small company. Well, not crazy small. They're worth $3 billion. So it's a $3 billion company, pretty close to an all-time low. Let's go see if a $3 billion market cap we can get behind. Oh, wow. Check out the analyst expectations. Revenue, like at this growth rate, they definitely deserve a high multiple. But the revenue is going to be $75 million in 2 quarters. You know, if you annualize that, that's like $300 million of revenue a year. So that means they're $300 million a year in a $3 billion market cap. So I want to check out their website real quick. Firefly Aerospace. Let's see what they do exactly. Why do they want my cookies? Okay. Firefly became the first commercial company to successfully land on the moon. Upcoming alpha launches include missions for Lockheed Martin, U.S. Space, NASA. So maybe some kind of rocket launch company. Maybe like the growth rate expected was really impressive. That's why I wouldn't completely dismiss this name as some junk. What are they losing? Are they 100 mil, 60 mil? They're losing a bit of money. The IPO just fortified their balance sheet. It's interesting. It might be worth a small, like I wouldn't have this as a meaningful size position, but certainly their growth expected is really interesting. Hopefully that was helpful though. MTY Food Group. Hey, what up, Charles? Let's check this one out. MTY Food Group. It's a Canadian company. Let's check it out. Looked up stuff like Chipotle, Wendy's, curious your take or comparison. Let's check this one out. So here's MTY Food Group. They're up they're up on a day where everything is pretty red. But unfortunately, if we zoom out, the stock hasn't done too well. They're the same price as they were back in 2016. So the stock has been flat for a while. But again, it's the whole industry. And they've actually the stock actually looks a lot better than like Wendy's or Jack in the Box or Krispy Kreme. So let's convert the currency from Canadian to USD. So looks like I love the franchising model. Let's go check out their franchising revenue. So this is an annual basis. They only report the annual numbers here. So corporate stores, so the corporate owned stores, check out that growth. The real money is made on the high margin, basically royalty streams from the franchising revenue, processing, distribution, retail. How's the growth? Let me check out the revenue. So we expected the growth is slowing, or it's negative. Sales are negative 0.4. But that explains why the stock is flat since a decade ago. But you get a nice yield, a 3.32% dividend yield. Let's go see if that is safe. Because see, operating profits. So they're making this is the before tax number, because they're having some like one-time adjustments, it looks like. So the before tax number is 36 mil. We'll just subtract 5 mil for tax. So they made 32 mil of net income. What the? Taxed refund paid. Oh, this Canadian company. So the cash flow statement's going to look completely different. Like interest paid, CFO. Okay, wait. We can still find the cost of dividends. So look at this. Actually, this is actually pretty good. Their 3.3% dividend only cost $5.5 million of net income a quarter, and they can actually easily afford that for a 3. Honestly, I'd rather buy them than maybe Wendy's right now. Hi Nathan. What about Eden Red. Hey, I'm gonna try and find this one for you. Yeah, if you got a ticker symbol you want me to look at, or stock, give me the ticker symbol. Wait, I think I found it. So here was the ticker symbol. It's a funny, long one. So I'm glad I found it for you. EDNMY. Looks like a European company. They're worth 5.2 billion. Unfortunately, looks like the stock is at an all-time low right now. We'll convert the currency from euros to USD. Benefits and engagement. Looks like that hit a record. What is this company? Let me go check out their website really quickly. Payment solutions for the working world. Solutions include employee benefits, complementary, and fleet mobility. So it looks like it's not a U.S. company, so this isn't in English. So unfortunate. Let's go check. Oh yeah, because we converted the currency. Let's see where most of the revenue comes from. So Europe, excluding France, is 46% of the revenue. Then France is another 15. Latin America is 29. So not much at all U.S. exposure. But let's check out the net income. The net income, does it report quarterly? They only report cumulative because they're not a U.S. company. But for the first half of this year, and this is real, for the first 6 months of 2025, they've made 300 million in net income, 150 mil a quarter, up 10% from the previous year. Looks like a bit of leverage, more liabilities than assets, but they make 150 mil a quarter, which is good. Did they pay a dividend? Oh, sheesh, a 6.4% dividend. You know what? Should we go see how much the dividend cost? Again, they got debt to pay, but dividend cost. This is for the half. So okay, that's good. It cost 340 million for the first half. They actually couldn't afford the dividend for the first half of this year. They could on operating profit, but when you include, maybe they had a small one-time adjustment or something, but they couldn't. I don't know about this name. Hopefully that was helpful. I don't know if it was. One World Sync. Hey, what is that? Give me the ticker symbol last minute here, and we'll try and find it for you. We'll look at a few more. Someone said like 10 in a year. I don't know what stock that is. If you got a stock you're gonna look at, let me know what the ticker symbol though, or Arista Networks. I think. So Clint said CYPH. I think that's ANET. I'll see if I can find it after this. CYPH. Let's see. Cypherpunk Technology. So a micro cap, $140 million company, but there's been some momentum and the market closes in 2 minutes. Hey, in 2 minutes, we'll go watch the market close. Hopefully we'll check out if the S&P had a little, in the last 5 minutes of every day, and also for the first 5 minutes of open, because the closing cross, it combines other things. There's so much liquidity. That's when institutions either buy a bunch or dump a bunch of shares. So the first 5 and last 5 minutes of every stock market day are like kind of the most important to see what hedge funds are doing. But yeah, here's Cyberpunk. Looks like some small company worth 140 mil. Looks like they just now got some short volume. I wish I could see the percentage, or does it tell me? 8.5% of the shares are being shorted, and that just came up. Well, let's see here. What was the market cap? 140 mil. The whole company is worth 140 mil, and they lose 15 mil a quarter, which is 60 million of net income a year. So they lost half their market cap and net income, but there must have been some sort of news here to cause this big bump up. Yeah, the volume spiked, and it's like no volume. But I would have touched that one. I don't know what that is. No revenue yet, or maybe I don't know. Alex said UAMY. Let's check that one out. UAMY. So this is a rare earth mineral company. They sell zeolite and antimony. It's like a mineral used in semiconductor parts. I'll show you their website really quickly. So again, super small company, but I'm about to show you why out of all the people are asking me and this was really popular like a month ago. People were asking me about this. What are some of your favorite rare earth mineral plays? After doing a lot of research and looking at some of these, this one's one of my more favorite picks just because they're actually profitable. We'll check this out. If we go to their operating profit right here, they just reported numbers. Wait, 2025 Q3, this just came out actually. Let's go see. So yikes, they missed on revenue, they missed on net income, and they missed on EBITDA. So okay, I guess the most recent quarter wasn't good, but check out what analysts are expecting in 2 quarters specifically. $42 million of revenue in 2 quarters. Now that's a lot of future growth expected. And the EPS is supposed to go positive. EBITDA is supposed to go positive. So analysts are expecting positive EPS, positive EBITDA. They have a really good balance sheet. So this is, out of all the rare earth mineral plays, this one is one of the less worst ones. They're worth 950 mil. Hopefully going to be making a couple mil every quarter. I don't know, but I wouldn't, again, I don't own them. I wouldn't have it as like a big size position either. But that's one of the rare earth mineral plays. And also, one of the reasons the momentum is dying off on them is because China is making it easier for the US to now get the rare earth mineral stuff. They used to have, there was a lot of, one of the reasons the stock initially rallied and momentumed up is because China out of nowhere, made US companies have to go through this extra permitting process, to get access to any of their rare earth minerals. Okay. But anyway, here's Arista Networks. Oh, and we'll go look at the market that just closed after this. But let's see. So Arista Networks product revenue grew 25%, reflecting robust demand for AI solutions. Service revenue increased 38%. So, hey, that's interesting. Here's what I've always loved about Arista Networks is just how much net income they make. Again, the valuation's high. They definitely deserve a high PE. But if we go to their net income down here, this is what's insane. Sorry, my thing's lagging. But there we go. They're making 800 million plus of after-tax net income a quarter. And at this growth rate, what's it going to be the same time next year? So they're easily making 800 mil plus in net income. Sales are up 27. Really good balance sheet. Investing in the future. So, and they're beating on expectations. Beat on revenue, beat on EPS, beat on EBITDA the most recent quarter. So 80% of the revenue comes in the US, but the PE of 48, the risk reward isn't amazing yet, but they definitely deserve like probably 40 PE. I would nibble here. I wouldn't probably buy significantly yet on the dip. I think I would rather, I would want a bit of more of a dip, but they might not do that because they're definitely quality. DUK or CUG or CEG. I'm probably biased because I own this one, but I would pick CEG. Oh, let's see. This brokerage is telling me that there is a double top. The probability of it being bearish is a 55%. Isn't that low, or I don't know. Anyway, CEG, this is my favorite nuclear play. They literally own 30% plus of all the US's nuclear reactors. Constellation Energy signs major power deal with Microsoft. Yeah, they're opening up the 3 Mile Island Unit 1 reactor literally to solely power one Microsoft data center. But anyway, this is my favorite nuclear play. They make good net income every quarter. You get a dividend. They do share buybacks. They do M&A. And let me show you this. They're actually one of my largest holdings. If you head over here to my dividend-only portfolio, and we'll check out how the market closed. Oh, wow. CEG almost went green on the day. Hey, let's go. So we only were down 0.01. But yeah, we do own them as our third largest holding in here. If we go to total equity, yeah, we got $5,000 of them. 15 shares. Let's see how the market closed. Wow, that's a nice little recovery got toward the end of the day. Y'all remember we were looking at the Qs, they were down 1.4%. Now it's only down 0.86. I mean, still not great of a day. Oh my goodness. Okay. So I just had to fill out a CAPTCHA on TikTok because TikTok thought I was AFK. So hopefully we're back. Okay. Yikes, triple miss. Hey, what up? What happened to CRMD? Let's check out CRMD as one of the last stocks here. This is a stock I bought. I nearly doubled my position in this stock today. And again, as much as I love this stock and as I love them, I wouldn't have it as a super major size position. Hey, Emily, US, no way. Thanks for the cat and the gift there. I appreciate that. If you got a stock you want me to look at, let me know. I appreciate that. But if we get over here to our Roth IRA, Roth IRA, tax-free retirement account, definitely underperformed. Look at us in the year to date. We're only up 0.12, or we started this exactly, or pretty much exactly a year ago. But anywho, one of the stocks we bought a bunch of today is CorMedix. We're down 10% now on our position, but we bought 15 and 9 shares. So we bought a bunch of shares today. Here's why I like this stock. And again, not financial advice. I wouldn't have it as a big size position. But look at the market cap. Their whole company is worth $780 million. So the whole company is worth $780 million. And this company makes every quarter 20 to 50 million of net income. That's the best part. So the price to net income, the PE ratio is a 4.5. They trade at 4.5 times net income, and they trade at 3.35 times next year's net income, which implies the EPS is going to grow, which we can see. The analyst expectations are the EPS is going to go from 30 to 72. It's going to more than double year over year. Like, I can't wait to see what happens. And these are real profits. It's not like one-time adjustments. They did just also acquire a business for $300 million this quarter. That's why their balance sheet just spiked up so much. Before today, they had no debt, but they issued $100 million of debt just for the acquisition. And again, this $100 million of debt, they could pay that off in less than a year of net income. Like, they made 50 mil of net income this quarter, 20 mil, 20. So anywho, CorMedix, I bought them because of their good financials. Do beware, there's high short interest. Wow. What was it again? 22% of all the shares are being shorted. So there's some sort of bear thesis, but that bear thesis was real before. They sell one product right now, Deaf and Cath, and all their sales come from basically, or 60% of their sales of this product come from basically this one hospital group. But this is why this acquisition of Melinta, it was genius. They spent $300 million to buy a company. And by the way, when they acquired this company, it's double-digit accretive to the EPS. So it's not decretive like Johnson & Johnson bought Shockwave. It's decretive to EPS. It's dilutive to you as a shareholder for the next 2 years. But same with like Pfizer, who just bought Metsera, but they bought a company and it's double-digit accretive to the EPS. My bad. I was in earlier asking about Lucid. Do you recommend cutting losses? Hey, what up, Alex? Yeah, sadly, it's tough to cut the losses while the stock is at an all-time low. But yeah, eventually, this isn't a stock you really want to own in the long run. Maybe wait. You might not get this, but it's probably oversold. It just from momentum point of view, it's oversold, so it might have a little bounce. But on any bounce that you get, you want to eventually get out of this stock. Again, why would I recommend not buying the dip on Lucid, and why do I think this is a kind of stock that's just going to continue to go lower and lower? Here's quickly why. If you look at the market cap in the top right, the whole company is worth $4.2 billion. So kind of think about that. You can buy the whole company for $4.2 billion, or you're buying a company that lost $1 billion just this quarter. 500 mil, 400 mil, $1 billion. So literally lose 25% of the whole company just this quarter. There's high bankruptcy risk here. And with Lucid, that's the sad part. What broker you use? Yeah, hey, if you want to get this brokerage I'm on or this software I'm on right now, it's in the link tree. It's in the link tree in my bio, that very first link there. Full disclosure, it is an affiliate link. So if you go and deposit like $100, we'll both get like a free stock, I think. But yeah, by the way, all these brokerages are all in the link tree in my bio. I'm not sure which one you're talking about, Robinhood, Webull. But yeah, this one's my favorite one. Literally free, cost nothing, no commissions. My favorite platform to buy stocks on and do analysis on stocks. So yeah, you get the super investor checkers. Yeah, very first link in the link tree in my bio, broker called Moomoo, Robinhood, Webull. They're all linked up there. Okay, so let's see here. Oh yeah, Danith, if you're on the YouTube stream, it's in the link in the description. So no bad news for CorMedix, just volatility. That's what I think, Hades. Yeah, I think it's just the shorts are after CorMedix, and they're kind of where they were just a few weeks and months ago. But that's why I really think the risk to reward is so good on this company. How much lower can they go? They trade at 3.3 times next year's net income. How much lower can it go? So, okay. What do you think of Futu? Great question, Nick. So this stock actually reports earnings tomorrow before the market opens. So if you buy the stock right now, so you're basically betting into earnings. So this, if you're wondering, what is FUTU stock? What is this? This stock is actually this app, this software, this brokerage I'm on right now, publicly traded. So this software I'm on right now, publicly traded. Again, even if this company were to go bankrupt, you're still FDIC insured for $250K. So even if this company goes bankrupt, your assets are safe. But this company is definitely not going bankrupt. I mean, I actually bought their stock because they're so impressive. They made $330 million of after-tax net income this quarter. So it's at least good to know that if you have a brokerage, the people you have a brokerage with, they're doing great as well. They're making a lot of net income, no chance of bankruptcy. And actually, there's so many cool things about this brokerage. They beat on expectations every quarter. You know, brokerages make a lot from commissions, and they also make a lot from interest income. So, and they just introduced crypto. So that's where this other income has led to triple-digit growth here. This is it's my favorite brokerage stock. And I own all the brokerages. I also own Robinhood stock, which is this brokerage publicly traded. And I also own Webull stock, which is publicly traded. Yeah, here's my Hood shares. First off, I regret every share I've ever sold a Robinhood. I used to own 50 plus more shares. I sold 50 shares at $36. And what's it today? It's at 115. So same with SoFi. I regret every share I've ever sold to SoFi. But Futu, this is my way. It's like a cheaper version of Robinhood, and they do this yearly special dividend. They're about to announce. They do it every December, right around Christmas time, December 1st or the first week of December. They announce a special dividend. So we're about to get a special dividend with this company. They're at record profits. So anyway, yeah, we can see their total users. They have 27 mil users. Client assets are 124 bill. I think Robinhood's are at 130 billion. So they're neck and neck. I don't know exactly, but anyway, these brokerages have crazy margins, 48% net margins. There you go. Hopefully that was helpful. Oh wait, I wanted to get to this stock right here first. Hey, Isaiah, shout out to homie Isaiah. I want to get to TNYA first, and then we'll get to IRIN. That's Iris Energy. What's going on with Bull and Archer? Hey, what up, Manny? Yeah, looks like a lot of the fintechs are struggling. Jay said, this is awesome. I'm loving this. Hey, thanks, Jay. I appreciate that. Yeah, by the way, if you guys want to support me, I literally sell nothing. I have no course, book, WhatsApp. The only thing you can do to help me out is hit the like button and subscribe button. We stream every day. I sell nothing. Watch out for people impersonating me. I'll never follow you, DM you, nothing like that. But here's Tenya Therapeutics. This is a $200 million company, so very small market cap. Don't know if I'd really trust this name, but let's go look at their financials. So it's a revenue-less startup. If we go to the revenue right here, it says zero. Or if we go over here to the revenue, says no data because they've never sold anything. They've never sold a product or a service. So just never sold anything. And also, this is another tough part. So it's a company that has no sales. So you're paying for kind of a lot of future hopium, but they lose 20 mil of net income a quarter. That sucks when you're only worth 200 million. That's literally 10% of the whole market cap they're losing every quarter, and they have no revenue. But I suspect, I don't know if they like announce FDA approval or announce that they're going to have sales, maybe the stock will go up, but it's not one that I'd really trust with any real meaningful money. Analysts aren't expecting any revenue. Nothing's blowing me away there. It looks like some really small micro cap. So let's see here. Okay, well, actually, here's another one that I feel like I feel so bad. I'm like bagging on a lot of people's stocks, but I feel like that's the most responsible thing for me to do. Kind of, hey, Papa Dan, thanks for the gift there. Here's why. I'll just give my recommendation on why there's some stocks I'd avoid, and this is one of the stocks I'd avoid as well. We just looked at that other stock. They had no revenue. They were a startup. This is another one that kind of falls under the same category. If we go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service, kind of in the startup. Well, not a startup phase, but here's the tough part. They have no revenue, and they lost 420 mil, 300 mil, 100 mil, 500 mil. They are burning through a couple hundred mil of net income every quarter, and they have no sales. And I guess analysts are expecting, 2 million of revenue in 2 quarters, but I think it's just tough to pay $5.4 billion for a company with no revenue. And that lost 4, 5, 6, 7, 8. Whoa. They've lost 1.4 bill of net income, and the whole company's worth 5.4. But if you're wondering, they're losing a bunch of net income. How are their assets growing like this? It's because they're kind of doing the smart thing. They're diluting the life out of you. They literally diluted you by $1 billion last quarter. You won't believe this. Hold on real quick. This is why I couldn't trust this name. We're about to look at the total common shares outstanding. As you know, with stocks, there's a total amount of shares that exist. All these negative net income numbers are basically, they're paying that off with share dilution. Look at the total common shares. You've been diluted by double year over year. There's 650 million shares that exist. When they IPO'd, it just goes up every quarter. So that's how they're able to basically stay afloat. They issue shares, and we can tell if you just go to the cash from financing activities, if this number is positive, that either means they issued debt or issued shares. If it's negative, that means they're either buying back their own shares or paying off debt, which is what you kind of want to see. Anywho, that's my little warning on Archer Aviation. I want to see them do good. I don't want to see anyone lose money, but I think it's tough to pay. Someone contacted me with your bio. I blocked them. Hey, thanks for that. You glad? Yeah. Hey, by the way, not in a mean way, but you know what I mean. I'll never follow you. I'll never DM you. I literally sell nothing. I have no course, book, WhatsApp, literally nothing. So only thing I do have is a YouTube channel. This is my only TikTok account, Nathan_Robert. And the only other thing I have is a YouTube channel. It's called Nathan Robert. You can just type it into YouTube. It's also in the link tree in my bio, but yeah. So here's Iris Energy. Thanks again, Isaiah. Good to see you, man. Iris, or this company called Iris Energy, they just secured a $10 billion Microsoft GPU cloud contract deal. So basically, Microsoft's been doing this a lot because the Microsoft Azure cloud is getting huge, but they don't want the liability on their balance sheet. So they're actually basically renting storage from Iris Energy, I think from Nebius. You had $15 billion deal with Nebius, a big deal with Iris Energy. But even before that Microsoft deal, check out how growthy they are. The revenue went from 50 mil to 240 mil year over year. I mean, and that's after it was 13 mil. So the revenue's a record 240 million this quarter. And the analysts are expecting 285 million in 2 quarters. So the revenue is expected to continue to climb higher. Let's go look at their earnings hub or earnings report, because I wonder what they reported exactly. Oh, it's been too long that it doesn't have it. Anyway, yeah, that's very interesting. But again, Iris Energy is probably just struggling right now, because if you look at Core, this is like a miniature CoreWeave. It's like a smaller version of CoreWeave. They were struggling this past couple of weeks, and they actually, I think, lost money this quarter. Yeah, they technically lost money this quarter. But again, I think investors are, at the end of the day, I like this one because of these growth rates. But I don't know if I'd buy the dip on them yet. Or not meaningfully. I wouldn't buy the dip meaningfully on them yet, I think. Hey, G Truth Seeker, what up, dude? It's SmartFix. Good to see you. I hope y'all are having a good day. So let's see. What do you think of CPRT? What up, Gru? Let's check that one out. Wait, CPRT. Oh, I thought you were talking about CPRX. Actually, CPRX is a healthcare stock I own in my. Right here. We're flat on our position. Actually, if y'all don't mind, I want to go over this stock and introduce y'all to this stock because they're fascinating. But here's Copar. Let's go over this stock real quick. They're a $40 billion company. So that's a big market cap. So 40 bill market cap. But unfortunately, if we scroll on the daily chart, they had a massive gap down on earnings and have kind of just been down ever since. Let's go see what their actual earnings were. Let's see. Earnings hub. Or I wonder if there's no AI coverage. But yeah, as we can see, look at this. The past 2 quarters, they've missed on expectations. They missed on revenue for the past 2 quarters. And what's the PE? Yeah, so before today, the PE ratio was a 35. It was a 40 PE. Whenever you have a high PE, as long as if you have a high PE and you miss on your sales growth expectations, that's going to collapse the stock. So it's probably just getting back more to a more realistic valuation. Let's see. So yeah, look at this. This is the kind of stock that deserves a 25 PE. It probably doesn't deserve a 40 PE like it used to, because it's kind of like mid to high single digit sales growth, 5% growth, 7.5% growth, not crazy double digit growth, but high single digits is still good. And they still make net income every quarter, easily for 350 to 400 million of after-tax net income a quarter. So that's the best news. They're making 400 mil of net income a quarter and a phenomenal balance sheet. Look at that. How much cash they got? $4.8 billion of cash, and that cash is earning them interest. It made them, whoa, wait. Okay, yeah, I was about to say, no way, it's 400 mil. They actually made 49 million of interest on their cash. And that just adds money to your bottom line. Yeah, that's why they basically, operating profit doesn't include the taxes, and it doesn't include the positive interest they make either. That's why the operating profit is nearly identical to the net income. The net income should always be like 15 to 20% lower than the operating profit because of taxes, but their interests are helping offset that. Anyway, they're probably at a fair price today with them missing on these growth expectations, but those net income numbers were great. Okay, wait. I see some for Nebius. Over 30 PE is an overvalued stock. Well, it depends on the company. Like if they just got EPS positive or something. That's why you always kind of look at the forward PE sometimes. Like here's Nebius. What's the forward PE? There is no forward PE. It's expected to lose net income. But yeah, Nebius right here. They also got, I think, they got a $17 billion deal from Microsoft, which is just crazy. That was on this day right here. The reason they gapped up, there was no earnings this day. It was just the news of them partnering a $16 billion deal with Microsoft. But another kind of growthy cloud play. If we go to the revenue expectations, it was already a record this quarter. If we go to their this quarter revenue, by the way, NVIDIA does own this company. The revenue is up 4x. It was 140 mil. So it was basically 150 mil of revenue this quarter, which was a record. Analysts are expecting in 2 quarters the revenue to be 500 million. That's 2 billion a year annualized. That's crazy. And the losses are expected to narrow. Here's the actual NVIDIA portfolio right here. NVIDIA owns a bunch of individual stocks like CoreWeave, APLD, ARM, Nebius. And someone said just in the chat here, Navin said, how do you feel about WeRide? Actually, here in the NVIDIA portfolio, one of the stocks they own is WeRide. It's a Chinese robo-taxi service play. It's basically Waymo, but in China. Or Tesla robo-taxi, but in China. I don't love this one. I don't think I wouldn't buy the dip on them. Do they have short interest? Really low short interest. So let's see. Do they have any revenue right now? So yeah, 17 million of revenue this quarter, service revenue and product revenue. But yeah, again, all the revenue comes from China. But yeah, I think it's some like Chinese startup robo-taxis, but they still lose 100 mil a quarter, but they have a good balance sheet. At least look at that. Ever since their IPO, yeah, they were able to issue a bunch of shares and really fortify that balance sheet. 812 mil of cash. They have 800 mil of cash. That means they can afford to lose 50 mil a quarter for a couple of years. What are analysts expecting here? So revenue is 49 mil. Oh, so for the full year, or no, that's for the full year 2020. So for the full year 2026, that's actually a cool metric we get. For the entire year 2026, the revenue is supposed to be 200 mil, which is 50 mil revenue a quarter, which is a double from the most recent quarter. Anyway, it looks like there is some growth expected. I don't know though. Okay. I think Pony, Pony, is another, I think Chinese, I think a robo-taxi play. Let me, or maybe you can check out their website, pony.ai, or maybe it's Chinese, so it won't work. Actually, I don't think it will work because of that. Oh no, here we go. So Pony looks like some autonomous, Waymo clone. Was that a Lexus brand? Yeah, so Lexus cars they got. Okay. Yeah, so they're headquartered in China. 99% of the revenue comes from China. Do they have revenue? They do. So they're doing like 40, 50 mil of revenue a quarter. Maybe it's just like a bigger version of WeRide. Another good balance sheet as well. Yeah, at least they have a good balance sheet. Let's check the cash. 600 mil. It almost looks identical to the last stock. 600 mil of cash, losing 50 mil a quarter. So anyway, it's like Pony and that other stock are like your pure Chinese robo-taxi plays. What is the app that, hey, what up in, by the way, this is actually a software brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, that very first link there. And I actually want to go back to my Webull. By the way, all these brokerages are all in the link tree in my bio. I actually want to go over my stock real quick. No one asked for this, but I just want to go over it because I think it'll impress you. But this is CPRX right here. Let me actually analyze them on. This is my favorite app to actually analyze stuff on. Very first link in the link tree in my bio, broker called Moomoo. But anyway, here's Catalyst Pharmaceuticals. I love their numbers. If we go to the PE, they trade at 13 PE. So first off, that's a very fair valuation, and that's not like propped up either. Like that's like what they're really trading at. If we go to their net income right here, this is the best part. They make easily over 50 million of net income a quarter after tax net income. The operating profit was 66 mil. So that's after they paid 15 mil of taxes. So they're making easily 50 million of after-tax net income a quarter, which is 200 million a year. So they're making 200 million a year easily. And the whole company is worth 2.7 billion. So yeah, that's a real 13 PE, very fair. They sell these 3 prescriptions. So that might be why PE is a little low, because it's a bit concentrated into just a few products. But check this out, FDIC or whatever you pronounce this is at a record sales. It's never been over 90 million before, 92 million of sales, and they have these other 100% of the revenue comes in the US. They have FICOMPA, looks like that's down 25% year over year. Maybe that's led to some decline in Agamree. Look at that growth, triple digit. Literally, they created this. It was 1 million of revenue. Now it's 32 million at this triple digit growth rate. What's it going to be the same time next year? So it looks like Agamree, whatever, FDIC, these are your 2 main growth drivers. And they're beating on expectations every quarter. Check that out. Analysts expected 136. They did 148. They beat on EPS. They beat on EBITDA. They're literally triple beating every quarter. What's their net margins of 35 to 40% net margins. With the story just keeps on getting better. With a fortress balance sheet. So wait a minute. 690 million of cash. 690 million of cash. That's literally like 25% of the market cap. their net cash per share is like $4 to $5. So $4 to $5 of their stock price is just their cash on hand. I bet they're making interest on it too. Let's go check. Yeah, because they have so much cash, they literally made it in positive interest, 6.8 million of interest. I mean, it's nuts. So anyway, that's kind of my pitch for CPRX for you. Again, as much as I love a lot of these names like CPRX, Cormedics, they're not major size positions, $550. And there's a lot of stocks I have like that. Where as much as I love the company, I don't want them as meaningful size positions. I love Axon a lot. I love Clear Secure. I love PSIX. Like I love them, but as much as I love them, I only want them as a small couple $100 position. All right. Can you check on Webull? Or hey, do you mean Webull stock? I actually bought today a bit more of Webull stock down here. Yeah, we got 40 shares of Webull now. Another one that I don't have as a major size position, $300 in this name right now. I actually want to make that a little bit bigger of a position eventually. Do you think cybersecurity sector will do great by 2 to 3 years? Absolutely, Jimbo. And I think it will. Like cybersecurity is like the part of software I think is like immune to AI. If you look at Adobe, Salesforce, a lot of these stocks are being hurt by the AI thesis. But I'm a believer that cybersecurity, like PANW, is probably my favorite pick in CrowdStrike. The hackers will utilize AI and get better at hacking. The demand for cybersecurity should only be going higher, especially after AI. And this one specifically, PANW, is a subscription model play. My favorite cybersecurity play. Just hits a new record every year, every quarter. They had a record net income or record profitable quarter. They make a couple $100 million net income every quarter. The free cash flow is even better. They beat on every expectation every quarter. So anyway, there's PANW for you. Let's see here. What is this? The balance sheet is the end results. Hey, what up, Edwin? Should be 15 to 30. However, tech stocks over 30 can lead towards another bubble. Oh, yeah, you mean it? Yeah, in general, the PE ratio of the S&P 500, like when you blend the entire S&P 500 together, I think the S&P trades at like a 23 PE ratio actually. So that's kind of like the market average multiple is like a 20 to 25. But if you have a higher growth rate, like that's I think at a 8 to 10% growth rate on average. If you have a higher than 8 to 10% growth rate, you get assigned. It depends on top line, bottom line margins, all that. There's so much of the story, but in just general kind of rule of thumb, the growth rate, you match it with the PE. Okay. Yeah, like Meta's dog cheap. Yeah, Meta's at a 20 forward PE. Oh, yeah, let me check out ADMA real quick. They're actually on my watch list. And we'll look at BBAI real quick. And Duolingo is the last couple here. Dang, we're almost at the 3-hour mark. I didn't even realize. So here's ADMA Biologics. Yeah, by the way, if you want to hit the follow button, we stream every day. Sometimes we'll do random 3-hour streams. Sometimes we stream twice in a day, sometimes too. But anyway, this is a $3.7 billion company, and the PE ratio is a 17, which means they're net income positive if they have a PE ratio. MDMA Biomanufacturing. Check out the growth rates in the middle here. It's up 14 after it grew 40 or 57, after it grew 51, after it grew 87. So the growth rate is slowing down a little bit, but still phenomenal numbers. Analysts are expecting the revenue to just continue to climb higher. They beat on revenue this quarter. They met on EPS and they beat on EBITDA. And they're net income positive every quarter. That's the best part. I mean, easily like 200 mil of net income plus a year and a really good balance sheet. Are they investing in the future? They are. So actually, I really like this one, and that's also why they're on my watch list. They have good revenue growth, and they're like it's slowing down, but the revenue's up 12 after it grew 80. Like it's holding on to that growth, and after that grew 77. So crazy growth, and they're net income positive every quarter. What was their net margin again? Net margin is crazy, basically 25 to 30% net margin. They had a one-time adjustment this quarter. Don't ignore that one quarter, but yeah. Okay, BBAI, I think they report earnings real soon. Or maybe they already reported earnings. I don't know. There's some weekly news here. Maybe not. Oh well. Okay, so that's the price to sales. So 16 times price to sales. Revenue this quarter fell 20%. So the sales are down by 20%. The net income was negative 20 mil. Oh yeah, this company just did an acquisition. You know what? Let me get the AI results, see what they have to say. So check this out right here. Uh, Wait, revenue. Okay, so here's why the revenue decreased. So the revenue decreased due to lower U.S. Army program volumes and government contract disruptions. Um, so yeah, number three here, cash position strengthened to a record high, enabling strategic acquisitions like the Ask Sage to enhance defense AI capabilities. So anyway, they just acquired a company for 250 mil. You can see the cost if you go to cash from investing activities. They spent 260 mil this quarter buying an asset, which is interesting. So anyway, I wonder how that acquisition will help, but it's weird to see that even after they spent 260 mil on that acquisition, the revenue still fell 20% year over year. I don't know. So let me go over Duolingo real quick and so Duolingo, this one, yo, Jay, yes, sir, we do stream every day or pretty much every day. Sometimes we'll miss one day or maybe 2 days a week, but I try every day to stream every day. And I also, if you miss anything, I'm also streaming on YouTube. You can like rewind it. But anyway, here's Duolingo right here. This is a stock I think is worth nibbling on right now at this current price. They're being hurt by the AI thesis. Duolingo is that language learning app, and OpenAI, which is ChatGPT, OpenAI, the parent company, created a language learning app competitor to Duolingo that's free, where you don't have to pay for a subscription. So basically, Duolingo is a subscription language learning app, and 85% of all the revenue is their subscription revenue. People pay a subscription. Maybe in the future, and this is kind of what's being priced in, maybe the growth rate is going to slow down for people not paying them any money anymore. But check this out. This is why I nibble on them right now, because that hasn't happened at all. Their numbers, in fact, are improving. The revenue is up 45% year over year. After grew 48, after grew 46, after grew 49. The growth rate is insane. It's just like 40 to 50% every quarter. And if you don't pay for their subscription, you see advertisements. And their advertising revenue grew 46% year over year. Last quarter was 55. So they're just seeing some nice growth that isn't suggesting that there is some that this new app by also Google now has a language learning app for free, but we're not seeing it hurt their numbers yet. But it might in the future, but it hasn't yet. Matter of fact, they triple beat on every metric this quarter. They had a little one-time adjustment to their net income. It says they made $292 million. They actually only made 35 mil plus a little more because they make so much interest on their cash. But I love Duolingo, super growthy. And I nibble on them at this current price. Wouldn't go, like if I wanted Duolingo as 5% of my portfolio, I wouldn't make it 5% of my portfolio today, but I'd nibble on it. Greatly appreciate it. Hey, thanks, Jay. I appreciate that. Yo, we're streaming on YouTube and TikTok right now. By the way, the best way to support me, y'all, is just subscribe to my YouTube channel and watch the stream from YouTube. I'm trying to build up my YouTube viewers because I don't get many on there compared to TikTok. But this will probably be the last stock we look at, and then I'll do a quick portfolio update. You're still streaming? Hey, what up, Jace? Yes, sir. Hey, so yeah. Yeah, we're basically at the 3-hour mark. Hope y'all are having a great Monday. So here's Meta Platforms. I do own this one. And I think, again, if you have the intention to never sell, Meta's worth literally buying right now. The forward PE is a 20. I mean, for a Mag 7 name like Meta, that's just like how much. I couldn't see Meta trading at a high teen multiple. Again, the reason the PE ratio right now is 26, that's actually artificially high. Again, the PE ratio is the price to EPS, which is just the price to net income. But the EPS fell 82%. Because the net income fell 82% because of a one-time tax charge. It said the net income was only $2.7 billion. That was a one-time adjustment. It was actually a record $20 billion, but they had the one-time tax charge from the big, beautiful bill, which makes the PE ratio. They're literally 20 PE on Meta. Another reason investors are scared of Meta, aren't happy with Meta, is because of how much they're spending on AI right now. They're spending 20 to 25 billion of their net income and free cash flow every quarter investing in AI. And let's hope they can get a return on these chips. And they're also, I think Michael Burry did some short thesis on them, like, because they're like adding money, they're adding depreciation to their right now revenue to make it look higher than it is, or it's no big deal at all. But like these Blackwell chips, like if you buy a Blackwell chip right now for a data center, like the value of that Blackwell chip in 10 years is literally zero, or like 15 years, like it just won't, zero, it just won't work. But, Mark Zuck, this is why Mark Zuck is so rich, and he owns 13.5% of Meta. So he owns 13.5% of a $1.5 trillion asset. That's why the rich are, he deserves it for not selling before today. That's why what I tell people, like, okay, so anywho, the question is, will Meta ever perform a forward split in the near term because I won in? Oh, hey, the thing is, that would just make it easier to buy a share, but you could buy, and I'm always a fan of this, buying fractional shares. I own a lot of fractional shares of stuff like McDonald's and other companies. So I don't mind buying fractional shares. But yeah, Meta is a great never sell stock. They're introducing ads to WhatsApp, and look at their daily active users. This is crazy. They legit have 3.54 billion daily active users. It's pretty much half the world. And that number, I hope, isn't fudged up on AI bots because, as you know, China, which is like 20% of the world's population, aren't allowed to use any Meta platform. So it's like 50% of the world's population, after you exclude 20% of it, use a Meta app once a day. I don't know. Maybe they're double counting like like if someone's on Threads and Instagram and Facebook, maybe they're double count. I don't know, but still impressive numbers. And the numbers don't lie. I mean, they did 50 billion of revenue. There's a record quarter, 50 bill of revenue, record Q3 profit, 20 bill. Of course, they had the one-time tax adjustment, but when you exclude the literal tax thing, record quarter for Meta, plus the dividends, buybacks, all that. We got some new folks in here. We see James and Gabriel. All right, maybe we'll check these two out before we go. Thanks for being here. CoreWeave did just report earnings. Actually, they're owned by NVIDIA. If we go to the NVIDIA portfolio down here, how many people you know are paying for AI subscriptions? I don't know. I ChatGPT maybe, but besides that, I don't know many. But anyway, here's the NVIDIA portfolio right here. Obviously they own CoreWeave is their largest holding, APLD. They own ARM. I love ARM. If you didn't know, ARM is really a royalty business, a royalty and licensing play. They have 100% gross margins before you add the tax and stuff. Literally gross margins, 98%. How? Because ARM actually used to like break it down for us. My Wi-Fi is so slow right now. Please load quicker. Okay, maybe it won't, but yeah, so look at this. 60 or 59% of the revenue is their royalty revenue, and the other half is their licensing other revenue, which is all really high margin. But anyway, I don't know why I'm talking about ARM. Let's talk about CoreWeave real quick. Then we'll look at OGN is probably the last one. So I have a fractional share of Meta. Regret not buying it. Yeah, nice. So here's CoreWeave right here. This is your data center business. Let's see if there's any recent news. No. Okay. Well, they just reported earnings and they said there was a delay. They lowered their guidance because they couldn't get enough workers to like build and work their data centers, or apparently. Let's check this out. So check this out. We'll read the number one. Revenue growth is fueled by large contracts, and they have a crazy backlog. A $14 billion deal with Meta and a $6.5 billion expansion to their original deal with OpenAI. But check this out. Their contracted backlog nearly doubled to $55 billion. They have a $55 billion backlog, but it says right here, operating margins were below expectations, impacted by delays in third-party data center deployments and increasing scaling cost. So they lowered their guidance on that news, but check out this is the best part about CoreWeave is how freaking growthy their sales are. And literally in 2023, when they IPO, the revenue was $116 million. Now it's a record this quarter, $1.4 billion in net income. So $1.4 billion was a record, and analysts are expecting in 2 quarters the revenue to be $2.4 billion. The growth is expected is even more. They are still sadly expected to lose, 50 cents of EPS a quarter, which is about 300. So they're expected to lose 300 million in net income. So that's the one thing I don't love about CoreWeave is the fact that they lose a bunch of money. But anyway, the growth there is certainly interesting, and we don't want to see any more delays, I guess, to the data center deployment there. Oh wait, OGN stock. What was this one? OGN Organon. Why is that hard to say? Organon. Okay. $1.2 billion company. What is this right here? What's this news? Hellenis and Organon announced U.S. FDA approval of Paherty or whatever. It looks like some sort of medical company, biotech. So they're worth $2 billion. Let's see. So yeah, prescription manufacturer, we'll call it. So look at this. Nexplanon, that's down 8% year over year. Other revenue down 0.9. Atozet down 24. Well, what's their blended? Let's just blend this all together and look at their total revenue. So when we combine all their prescriptions together, the total revenue was only up 1.2, which isn't great. That doesn't beat inflation. So that might be why investors are a little disappointed. And they've kind of been doing that all for the past year. that's the bad news. The low single digit growth rate, 1.2, negative 0.8, negative 6, negative 0.4. So they have growth that doesn't beat inflation, but they still make net income every quarter. This is the good news. They're still making 100 to 150 mil in net income a quarter. Ooh, but it looks like they're a bit leveraged. They have a lot of debt and a lot of liabilities to pay, but at least they can't afford it. But here's the thing why they might not be able to. They have a freaking 8% dividend yield. Let's go see if that's safe. So they have an 8% dividend. They made 160 million of net income this quarter. The dividend, so the dividend cost 75 million of net income. Did the dividend just like get cut, or was it a reverse? But no, I think it just got cut. The dividend went from 28 cents to 2 cents. So I think they cut their dividend, but that would be good news if they did, because I really don't know about that company. I wish I could give you more thoughts on them. I'd be careful. Looks like the growth is slowed, but maybe it's all priced in. Do you own any Meta? I do. I own 5 shares of Meta, and they've been struggling. Here we go. They're actually in our dividend-only portfolio where, of course, every stock in here pays a dividend, but as you can probably tell, most of these are dividend growth companies like Meta, Google. We're up only 14% on Meta now. So yeah, they're our smallest holding in here, but I might look to buy another share of Meta. So they're a phenomenal never sell stock. So anywho, I got to run. I hope you guys have a great rest of your day. Happy Monday. We're going to be streaming the same time tomorrow. If you want to hit the follow button, we stream every day. Watch out for people impersonating me. As you know, guys, I sell nothing. I have no course, book, WhatsApp. I'll never follow you, never DM you, nothing like that. Yeah, watch out for people impersonating me. Someone else said earlier, was that you that DM me? No, that wasn't me. So see you later. Thanks for being here. Hit the follow button if you haven't already. And thank you to everyone on the YouTube stream. Y'all are the best. As y'all know, I'm trying to build up my YouTube channel. So, because I get like 3 times as many viewers on TikTok. But thank you to everyone on YouTube. Y'all are the best. See you soon. We'll be live tomorrow. Hey, and if you haven't already, it still would help me out. If you haven't already, hit the like button on the stream. It still helps me out. And hit the subscribe button. Oh, no, Tyrant. I'm ending the stream. I feel so bad.